Hello, everybody. Welcome to the official NVIDIA Q1 2025 earnings stream. I am here with Tanner and Jose. It's going to be an exciting 3 hours to see what is going to happen to one of the most exciting companies on the planet. And then as a byproduct, what's going to happen to the stock market. And we're going to be here. Jose, Tanner, what's up?
Doing well, man. Super freaking excited for tonight, or this evening, I guess. And we'll have to see. I mean, we'll talk about it for the next 30 minutes or so. But Jose, what are you thinking?
Yeah, first I'm thinking I'm mad I didn't get the text to bring my leather jacket to Florida with me. So that's the first thing. That's the first thing I'm thinking here. I got robbed out of this experience to be in a leather jacket with you guys. But yeah, I mean, super excited about earnings. Yeah, this Tanner, I think this earnings is going to be an interesting one where Nvidia is the only one that can kind of provide the answers to the issues that in the short term is what investors are thinking about. And the reason I mean that, Tanner, is the last few earnings, we've had a few issues for Nvidia. We've had kind of like the DeepSeek issue. We've had kind of like the is AI demand still there issue. And all those other issues, all the big cloud server providers were able to answer those questions for NVIDIA investors. This quarter, we have the question is, how bad is the loss of the Chinese market going to do with guidance? And how quickly are we going to get that tailwind from the UAE announcements and some of these other kind of sovereign AI? And this is one of those few earnings where the other big tech players can't really tell us what's the answer for that. So this is one that I'm actually a little bit excited about because there's so much unknown that can happen from it that I'm finally like, oh, wow, this is a surprising earnings call that I can have some pretty cool live reactions to what is said in the earnings call. Maybe not too much about the movement, but what is said during the earnings call itself.
Yeah.
So go ahead, Tanner, go ahead.
No, I was just going to say, I'm excited to hear some commentary, not just about the sort of powering down the H20 to see if they can, bypass the current restrictions to still go ahead and sell back to China, but also these new rumors about a potential, lower level Blackwell chip that will sell to China. And if that's part of any sort of guidance for the rest of the year or whenever they're planning on putting this out. So I'd love some commentary on that as well.
So I just want to give a little bit of background to everyone who might be new to the channel or doesn't know who we are. My name is Amit, and we got Tanner and Jose. If you guys want any of their YouTubes or Twitters, all that will be in my description and their corresponding descriptions on the YouTube streams as well. I have been an NVIDIA shareholder since January. These two have been NVIDIA shareholders for the past almost 10 years. So I think you guys are going to get a good level of knowledge coming from people who understand the company at a pretty intimate level, that have been through all the ups and downs in the stock. And then you'll be with someone who's obsessed with the day-to-day news around the markets and NVIDIA. And so I think all of that together should hopefully be really valuable over the next 3 hours in terms of understanding what's going on with NVIDIA. There's a lot of stuff to talk about, a lot of stuff to go through. The Financial Times just put out a report that Trump's telling old chip designers to not sell their chips into China. So you have a lot of different volatile things happening in the moment. We're going to try to get through everything, but at about 4:05 Eastern, we'll get the NVIDIA numbers. We also have Salesforce and a couple other companies, so we'll try to look at them, but NVIDIA will be the majority of the coverage today. Let's start off the conversation here. Jose, the street wants $44 billion and about 90 cents of EPS. Do you think that's doable for NVIDIA in this quarter?
Yeah, I mean, the company, I think, on their own guided about $43 billion. I think kind of getting the 44 isn't impossible. I think it's actually going to be in revenue and earnings per share. If you look at the non-GAAP basis, on the GAAP basis, it's going to look pretty weak because the overall, and I see this, I was just looking at that as well. But in the non-GAAP basis, it's going to be crucial because they are taking the $5 billion inventory hit, which is not a cash hit, but it is going to impact the earnings per share on the GAAP basis, and it is going to impact GAAP margins. So this is going to be one of those quarters where you're more looking at the non-GAAP numbers, even though I think most quarters, at least for NVIDIA, that's the case. The other thing I would say is because we saw that China ban with the H20, I do believe there were whispers happening all over the place, all over the world before that, and that could have created this forward pushing on a lot of these AI Chinese players to buy the H20 before the ban. So that could be another reason why we might even see a bigger boost than what the street is expecting for the current numbers. Now, I don't think stock is going to matter on how much they beat. It's all going to be about guidance.
Yeah, agreed. And hopefully they can keep up that 75% gross profit margin for end of the year. I still think it'll be lower this quarter. I think they're expecting around 71%. But let's hope that they continue to hold up that guidance. That's what the stock is going to essentially be pinned to, I think, once we actually see the numbers.
Okay, I'm putting the official pump or dump poll in my chat.
Pump, baby.
And yeah, so that's my next question. Tanner, pump or dump?
Pump.
Why?
Well, I think artificial intelligence is absolutely massive. I think that Jensen Huang will come in very excited to talk about the future and, all the AI demand that they're end up seeing, and prove out that they have a very long runway of multiple years of building out multiple gigawatts worth of data centers, not just in the United States, but worldwide. And he'll have to prove that, China is a big part of this, but it doesn't necessarily need to be, and that they have enough demand even without them. I didn't actually see that full US chip comment that you saw, the ban there. So that'll be another thing that they have to get through. But yeah.
Yeah, this news came out literally 10 minutes ago. We don't even know if it's exactly true. The Financial Times is saying it. Maybe it's not, but CDNS is getting hit 10%. They're a chip designer. Nvidia not really getting affected by this. We did touch 137 today, so there's a little bit of volatility, but overall, it's been relatively flat. Jose, these are the last 12 quarterly earning stock price reactions. As you can see, the past couple quarters, either flat or negative. Do you think we pump or dump today?
Well, first, let me just say long-term ultimate pump on this earnings call. I'm hoping they give us a great color on the Chinese market, because I do think that's the only thing Wall Street cares about today. So for today, and I want to say historically, Nvidia likes to give a little bit more of like the political top level answer on a lot of these things, which is great for your long-term investors. But I'm going to say we're going to stay within this streak of flat to down on earnings for after earnings. But again, long-term potential, ultimate pump for the stock. I think the street is only worrying about one thing today, and that's kind of the Chinese market, especially now that we just kind of got that extra Chinese thoughts that everybody's going to be thinking in today's earnings call. What does this new Chinese news mean for the overall stock and tomorrow?
Admit, we got one pump, one dump. Break the tie here.
Well, I can't let the crowd down. I'm going for pump, baby.
Yeah,
we
baby.
are going to the moon. No, and also
I just saw my subscriber count drop dramatically on YouTube after that dump comment.
Well, 70% of the chat says pump. Look, I think we can pump, because I think I agree with you. If they give us enough China clarity and maybe the UAE stuff isn't priced in, they can beat on their guidance. I don't think we'll get a dump, but I'm more likely in the lines of we're going to go flat, because the stock's up 35% from the lows. I do think there's a great runway of AI long term, but in the short term, especially with the China headwind and potentially this gross margin story that I want to talk about, it could mean expectations are a bit too high. And that's what JP Morgan said yesterday. They said in their research, a lot of the expectations are still too aggressive compared to some of the actual hard data that they're seeing. So let's talk about that. Tanner, do you think there's a world where gross margins dip anywhere below 70%?
Yeah, I mean, there's a potential, obviously, but I actually didn't like the report. I thought that it was a little bit too bearish for me. I think that they're trying to factor in the similar amount of Chinese sales that we saw in the past few quarters, and then saying, okay, well, with a $5.2 or $5.5 billion write-off for the quarter, then the rest of Wall Street is not taking that into account. When the way that I see it from other reports that I saw is that the amount of Chinese sales for Q1 was actually extremely high, minus the 5 billion brought them back to somewhere where they were already at, in previous quarters. So I think that they are on the very bearish side versus the rest of Wall Street. And I actually think somewhere around 43 to 44 billion is expected, not 38 billion or something like this that they had proposed.
Wow, is that what they're saying? They're thinking 38 billion is going to be this. Wow, that's I don't know. I feel like there's a massive disservice with that type of number projection. That would pretty much be a, flat quarter, and I don't think with the overall AI demand that's even possible right now.
Yeah, I mean, it's there's a potential. I think that they are on the very bearish side versus the rest of Wall Street. And I actually think somewhere around 43 to 44 billion is expected, not 38 billion or something like this that they had proposed.
Wow, is that what they're saying? They they're thinking 38 billion is going to be this. Wow, that's I don't know. I feel like there's a massive disservice with that type of number projection. That would pretty much be a flat quarter, and I don't think with the overall AI demand that's even possible right now.
Okay, so let me give you guys some stats. By the way, Corey right here down 7%. Real quick before these stats, in terms of the semis, AMD down about 1%, Micron flat, Lam Research flat, Dell down basically flat, ASML down 1.2, SMCI up 1.4, TSM down 0.6. I mean, all the semis, SMH, which is the semiconductor ETF, down about 1%. That is going to matter when we take a look at what happens with NVIDIA, given NVIDIA kind of controls the entire semiconductor ecosystem. Now, a couple of stats today. There is something called a derivatives market, also known as the options market, and option traders are going pretty wild. As of today, NVIDIA has traded 2.5 million options across the board. Calls are 1.5 million. Puts are 979,000. The most active contract in the entire stock market today by volume is the NVIDIA May 30th, which is in 2 days, $140 call. There are 145,000 of those contracts that have been traded today. 98,000 of them are open. So people are obviously betting with their dollars that maybe NVIDIA does get much higher. The implied move is 8%. So they're either looking at around 142 or 124 in terms of where we are right now. So I guess to get into that perspective, Tanner, do you think a lot of people are gambling with these option contracts right now, given NVIDIA might not pump?
So I was actually thinking about writing covered calls as well through earnings. I ended up not pulling the trigger because I think that there could be a very large pump. I mean, we're talking about NVIDIA. Sorry, I'm going a little off your question here, but like NVIDIA coming off the lows of 35%. But if you actually go back a year, the stock is essentially flat and just range bound in this area, while seeing the most absurd growth any mega cap company has ever seen in history. So I do think, along with the market, that over the next little bit, that this company will need to see all-time highs again. And so whether that happens in after hours today or, few months from now, I do think that's going to end up happening. So obviously gamblers are going to bet on bullish outcomes over time because they're seeing the growth.
Jose, I don't think you're doing anything in the options market, are you?
Yeah, no, and I would just say, I mean, obviously careful with options, with buying the options. 140, I mean, you still, I wonder what the premium is on that 140, what the actual, you have to have, I wonder what the premium is for a 2-day time on those options. Today, even if it is, I would be, I'd rather be more of a put seller, if anything, in a market like this, opposed to a call option buyer. Or like Tanner said, I wouldn't sell on this earnings. I wouldn't sell cover calls either, though, just because there is always the way that Jensen can talk about the Chinese market, the GB300, which the channels I'm following says the GB300 is gonna outpace the GB200, which is already doing amazing. So long-term tailwind, extremely bullish for this company. Short-term, it's definitely a gambling game.
Yeah, and this is what Bloomberg said today as well. They think that Blackwell is going very well with the GB300, and then margins aren't going to disappoint, like JP Morgan might be saying they will.
Essentially, all of Wall Street, except for one report, is saying that this is going to be a relatively good quarter. The JP Morgans are a little bit of an outlier. I think Seaport Global was also a little bit of an outlier as well.
Right. Okay, so NVIDIA going a little red. Yep, it was at 137, now 135, flat on the day, but red from those highs of the day as the market is starting to factor in. We got 10 minutes left for one of the most explosive earnings of Q1. Put in the chat, if you want, when you bought NVIDIA, how many shares you have of NVIDIA, what your average is on NVIDIA. I think there was someone in the chat a week ago who has 100,000 shares of NVIDIA at a $2 average. So, I mean, this company has just touched the lives of so many of retail that have turned it into the darling of Wall Street. And they put up the growth to justify that. So here's kind of my next question. Walmart has a higher PE than NVIDIA. Costco has a higher PE than NVIDIA. Netflix has a higher PE than NVIDIA. None of those are growing at the rate of NVIDIA. Jose, why do you think those companies are more expensive than NVIDIA?
I think the market is just scared of the AI potential. I mean, even though AI has been a technology since the 80s, the 90s, you've heard of AI. So you always hear in every decade, I'm pretty sure this time AI is real. This time AI is real. So I think the market just has that fear that AI is just not real right now, like we're seeing it. But I mean, so you're still pricing that risk of what happens when this AI demand goes away, just like it came out of nowhere. And I think I understand that thought process, but seeing the innovations that are happening in the AI world, I mean, Google I/O, the aspect of VO3 being able to generate a sound with the image and understanding that at that same frame, you need to play that sound and do that for 8 seconds still blows my mind. And I think as long as that continues, there is no stoppage of AI investment. So the risk, I think most investors traditionally are scared of just what happens when AI disappears. And I think that's the wrong question. I think AI is already here to stay. And now it's like, what happens with the next leg up in the AI market? And I think Nvidia is super cheap and you're putting too much safetiness on those other companies that don't really have that growth opportunity like Nvidia.
Tanner, your take on the fact that if all this AI is so transformational, why is the market paying more for Walmart over Nvidia?
I think it's potential stability and growth. So if you take a look at this image here that I shared, what you end up seeing is that although the growth has been explosive, it has tended to have stagnant times or go into negative growths over time. I mean, the crypto bubble popping was one of them. The slowdown in CapEx, people worried about COVID. There's all these different things that could happen that impact Nvidia. So if potentially there is rough times ahead and all the companies decide, hey, actually, maybe cash is better sitting on our balance sheet than going out to develop more data centers, we don't need to buy from Nvidia. In fact, actually, let's cancel our future orders. So that potential really doesn't sit for Costco, right? Some of these companies, although in my opinion, I think that they're a little bit more expensive and Nvidia is worth the risk whenever it's growing at, I mean, this quarter, potentially 65%. Like, that's worth the risk to me. But the consistency of a Costco or a Walmart is so easy to sleep on those companies or like sleep with those companies and just know that, your investments will grow and that more people will end up buying things and that it won't be as explosive or volatile as you would see for Nvidia.
I think that's fair. I think that's very fair. The cyclical nature of it, given the history on the chart you showed, is definitely a reason why people are scared. I think Jensen has said over and over and over again on every single earnings call, almost the same story, right? Just with better numbers every time. And still, there's this level of doubt of, is Nvidia Cisco back in 2000? Is AI really that transformational? And I think all of the anecdotal evidence that a lot of us have experienced, along with the data, ChatGPT growing at 4x the user base year over year, Elon Musk getting ready to spend $40 billion on 1 million GPUs. I mean, it's getting to the point where it's hard to deny that people are realizing there is a obvious TAM to this that is more explosive than probably the internet. But the question is, when does Nvidia get that respect? And look, it's a $3.3 trillion company. It's not like it's not getting that respect. It's just not trading at the multiples that some of these other companies are trading at, which you would reckon maybe don't deserve that much respect.
You guys don't have to answer this if you don't want to, but currently at the price sitting with the rest of my portfolio, this sits at around 41.5% of my portfolio, this stock alone. Do you guys have similar convictions in this stock just between the three of us?
Yeah, so mine is closer to, I would say 25%. At some point, it was about 33%. Most recently, Tanner, for me, during this market crash, I did put a huge influx of cash into my portfolio, and I wanted to increase my AI investment without just being purely Nvidia. So it's more been decreased as I increased my cash and gone into other AI plays, but I haven't really sold out of Nvidia. So it's about, I think it varies throughout the day, but it's closer to at least a quarter of my portfolio.
Yeah, still huge.
Yeah, I'm near Jose's world. Palantir and Robinhood are still pretty big for me, just because I was a bit earlier on those. But Tanner, it makes sense. It's almost 50%. I mean, you've been in this thing since a while ago. I guess let me flip the question back to you. Why haven't you sold? And I know you've sold here and there, but why do you still have this massive position?
Well, actually, a lot of my increases was recently. I mean, I didn't double my position, but I nearly doubled my position just recently whenever we dipped into the $190 range. I thought that was absolutely insane. The news that came out from China, from DeepSeek, we were just getting hit left and right. And yet every single large US company said, hey, this is not stopping our CapEx. In fact, let's upgrade it in the fact whenever we saw Meta's latest quarter, they went from, I think it was 63 billion to now 68 billion on average for their CapEx spend. So we're not seeing any slowdown in that respect, the models are proving more useful, and yet we're only in the generative AI era right now. As we know, this goes into agentic terms, and that's already starting to be built out. ChatGPT is doing great things there. Gemini's trying to do things there. But then after that, you have the physical AI era, right? Autonomous vehicles, robotics. Jensen is talking, 50% of the conversation tonight will be about the future of this business, not even what they're working on today. And that just proves to me that the total addressable market is absolutely huge. We didn't even talk about the comments from Anthropic's CEO that just recently came out. A lot of companies, if this is true, which he is essentially claiming that unemployment is going to rise dramatically, could hurt a lot of people. But as an investor, I have to pick the companies that are going to do well during that time. And Nvidia is going to do unbelievably.
Yeah, it's a fair point. I mean, the Anthropic CEO this morning said, hey, let's stop sugarcoating it. AI can wipe out half of all entry-level white-collar jobs and spike unemployment to 10 to 20%. None of these CEOs want to say this because it obviously hurts their businesses because they might be regulated more. But from that perspective, Nvidia is going to be the reason why this does happen if it does. And, most people want to be invested in the company that ends up benefiting.
And Jensen would never say this, by the way. He absolutely would not. Like you said, it would hurt regulation. The government doesn't want to hear this. It doesn't put him on Trump's good side by saying this or anything along those lines. So he's not going to say this either. And it might not even be true. But the idea is that AI is becoming so powerful that it can start to do human jobs. That is essentially the like what it boils down to. And the company that is enabling that, where CapEx spend in research and development is actually the new human capital spend, I think that, the semiconductors will do very well during that time. And it just so happens to be that I like betting on the market leaders, the market winners, and the ones that actually potentially will hold that lead, at least for the next, multiple years as we get into like Feynman and Vera Rubin and stuff like this. So I'm very excited.
Yeah, and we are seeing obviously the UAE get excited about ChatGPT as well, announcing that the entire country will have a ChatGPT Plus subscription. All of that is just more queries, more compute, more demand for NVIDIA chips. All right, folks, here we go. We got 1 minute. It is time. The results are probably about at 4:05. Usually 4:05, right? Not 4:10. I think it's 4:05.
4:15. 15.
Oh, 4:15. Okay.
Yeah, we got a while.
Okay, cool. So we're going to get Salesforce, ELF, and C3 AI. Those are the three ones first. We got 15 minutes to see what happens. The stock's probably going to keep being volatile after hours. Implied move is 8%. So you're looking at around 143 or around 125 in terms of the move. And we're going to see today what numbers.
I'm also seeing 420 for earnings for Nvidia. But
okay. So then we got 20 minutes. If you are new to the channel, we ring a bell every day at 4 p.m. to commemorate the market close. And today is no different other than the fact that today is going to be a very important market close. Folks, here we go. It's NVIDIA Q1 2025 earnings. The stock market is now closed. And now we wait.
And now we wait. Tanner, quick question for you, man. Computex, we saw kind of the one of my favorite announcements there was the NVLink Fusion.
Yeah.
Thoughts on that? I mean, I believe for NVIDIA to produce something like this, to enter not exactly the ASIC market, but it's more kind of like an upgraded version of that, an infrastructure within the ASIC space. But we didn't really get any financial numbers on it or anything for it. Do you think we might hear anything in today's earnings call, or is this something that might be too niche to hear out today?
Yeah, I don't know if we'll hear too much about it in this event, but I will, because I had a couple thoughts on this. I think I remember reading your tweets. You were quite bullish. I was a little bit mixed, to be honest. Obviously, entering new spaces is very exciting. But does this kind of prove, like, okay, let me restart really quickly. There's been a lot of comments from Jensen saying that a lot of the ASICs are essentially prototypes. They're not going to get to scale. We're not worried about this. He's even made comments that, if some of our competitors offered their chips for free, people would still pay for ours. And then the NVLink Fusion comes out, and I think that it almost kind of proves the other markets a little bit, that they are growing, and that although they still want to be a big part of it, and networking, they said is going to be one of their next big areas that they want to grow into, does it prove, still a space for, ASICs or CPUs or whatever they're going to end up partnering and networking with? So it is bullish, but I don't know. Any thoughts on that? I
mean, I think we do know the ASIC market is real, right? We have both billions of dollars from Broadcom and billions of dollars from Marvell in this space. So it is important to remember that this NVLink Fusion is not going to help kind of make these ASIC players. It's not going to help with the actual chip design. Is if you've gone through that process already of making a great design on the chip. And feel free to interrupt me if we do get any earnings. But if you already went through that process, if you invested billions of dollars into the AI chip development and you have a chip that works, we have a product that you can use to interconnect into this massive AI infrastructure. So it's only going to be available to those that have kind of created this. And we already see big players, no matter if NVIDIA's Blackwell is better, they're still trying to create some form of AI chip. So it's at least a way to get some dollars into there. The other thing is we did see that partnership with Qualcomm and Fujitsu, and I'll talk a little bit about that, as it does seem like maybe some stocks might be pumping and dumping.
All right, so we got Salesforce. We got a 4% move on Salesforce.
Your mic, Amit.
You can't hear me?
It's not good.
Let me switch. One sec.
Good ear.
Good ear. Is that better? Is this better? No? Okay, you got to give me a second. Give me 1 second.
Welcome to the Tanner and Jose show, where we just kicked the lead out.
Yeah, no cowbell here, but we could still pump the stock. What are you doing, Amit?
Okay, it should be better now.
No.
It's better now, right?
Yeah, are you seeing what we're seeing?
Yeah, dude, it should be good. This is my computer does this stuff stupidly. All right, cool. So Salesforce, we are looking at Salesforce, up 3% right here. Don't have the numbers yet. Should be getting it. Oh no, we do have the numbers? We do. All right, here we go. Here is Salesforce numbers.
Await those. Okay, and we're ready to go with Salesforce. Steve Kovac has those numbers for us. Hi, Steve.
Yeah, Morgan, it's beats on the top and bottom lines here. We're looking at EPS beating at $2.58. Adjusted, Street wanted to see $2.54. Revenue, a slight beat here, $9.83 billion. Street wanted to see $9.75 billion. We see shares up 4.5%. I'm still digging through the report, but those are the top and bottom lines there for you. I'll send it back over to you, Morgan.
Okay, the shares up about 4.5% right now. Don't miss Jim Cramer's exclusive interview with Salesforce.
Okay, so Salesforce, I mean, it's good. It's not crazy. It's up 5%. Again, it looks like a beat on the top and the bottom. They did just acquire a company for $8 billion. Agentforce is the thing everyone really cares about, if that's growing or not. So they beat by 1%, 258 versus 255, 9.8 versus 9.75 on revenue. EPS up 6% year over year. Revenue is up 8% year over year. Another company we're going to be looking at is Elf. They have earnings as well. Elf is down 10%. There she goes. I don't think any of us here are experts on Elf, but no. China company, or not Chinese company, but company that has a lot of supply chains in China, makeup company. Looks like their numbers were necessarily not the best. Don't have their numbers yet, but we'll take a look in a second. Elf right here is indeed down. And then Nvidia right here is still flat. We got about 15 minutes until we get Nvidia numbers, 134.69 currently right now on Nvidia.
Jose, do you follow Sentinel One?
No, I'm not too much into the cyberspace as of yet, but this is definitely a market that I believe can benefit dramatically with the AI space in general. But no, I don't follow it right now.
We do have another headline here. Don't know if this is confirmed, but it's per the Wall Street Journal. Elon Musk tried to block OpenAI CEO Sam Altman's AI deal in the Middle East.
I mean, that sounds about right.
And then Tesla just dropped some news. Of course, they're going to drop it right before NVIDIA reports. Tesla Robotaxi, do we have a date? It looks like June 12th. June 12th. Yep. Tesla's targeting June 12th for the launch early access of the Austin Robotaxi service. Sources say this week Tesla tested a Model Y on Austin roads without a safety driver in the driver's seat. Jose, kind of transitioning from Tesla to NVIDIA, do you think the automotive parts of NVIDIA's business are going to be big this quarter?
I mean, it's definitely growing at rapid levels, and we are seeing innovations in their kind of. Oh man, I'm banking on the name. Is it Thor right now? I forget where we're at. Tan, do you know what chip we're in for the automotive segment? Regardless, it's doing great, and they have a lot of announcements. So I think this is a market to always keep an eye on. But I don't think it's going to be a make or break segment for the stock today.
Yeah, sorry, I was half listening. I think you guys are talking about automotive for Nvidia. I think that this is one of the segments that will be the fastest growing across any of their other segments for multiple quarters in a row, as some companies are actually starting to launch. I think long term this surpasses gaming in terms of importance and in revenue. So hopefully continues to make up somewhere around 10% of their revenue. But overall, the data center piece will be everything for them, right? Everything else is peanuts, just additives versus what we see in data center.
All right, C3 AI is getting a 10% pump right here. I don't have their numbers, still waiting for it, but it looks like their numbers were pretty good. I don't think the expectations were super high, but they are getting a pump right here. Also, Viva Systems, they reported they beat by 13%. EPS is up 31% year over year, 197 versus 174. Revenue 759 versus 728. Beat by 4%. Revenue's up 17% year over year. This stock, Viva Systems, is up 11%. I mean, the general trend across Q1 is that companies are beating on EPS, and even if they're slightly missing on revenue, maybe because of AI and a variety of other reasons, they're beating on EPS, which means their margins are getting better, which has been very positive, and it's probably why the S&P recovered the way it did from the April lows. We also have Pure Storage. So this stock, 29 cents versus 25 cents on EPS, they beat by 16%. 778 versus 770 on revenue, they beat by 1%. Pure Storage, that stock is down 1%. Okay, cool. That's what we got right now. Okay, here's another question for you guys as we're waiting for Nvidia. Navitas, I know this is a smaller company, but they pumped like 250% over the past week based on their partnership. Jose, do you read into those things a lot, or it's kind of just when it comes to Nvidia?
Yeah, I mean, at first it showcases how NVIDIA wants to make sure there is no bottleneck in the AI development. On the top level overview, I don't know if viewers here, Elon recently was at an interview, I think with CNBC, and he actually talks a little bit about kind of the bottlenecks in the AI market. One of those bottlenecks is things like transformers and electrical components that help kind of bring voltage down and convert it to the type of voltage that these AI servers and AI racks need. But unfortunately, there is expected to be a shortage in that. NVIDIA seems to be trying to get ahead of the game and trying to eliminate a lot of those components by kind of being able to almost, not directly, but almost completely connect to the grid and eliminate a lot of those components between powering an AI data center and kind of the transformation going down. So this showcases that while NVIDIA doesn't need to develop it itself, it's partnering with companies like Navitas, a lot of other players, Infineon, STM, I forget, there was a whole list of players that NVIDIA is partnering up to create a solution that should come out in a year or so to eliminate that bottleneck. Now, for Navitas, it opens up the opportunity to become a revenue player for NVIDIA in this market, but it is very competitive and it's more of a collaboration. It's not yet a promise of revenue, but it does kind of get them in the door ahead for a potential revenue growth. I'm not touching it, but I see the reason behind NVIDIA's push here.
NVIDIA up 0.5% after hours, Salesforce up 5%, C3 AI up 12%, ELF down 12%, and Tesla up 1% on that robotaxi news. We got an update right here. Again, before we went live, the Financial Times reported that Trump is going to ask chip designers to stop selling into China. Here's an update on that right now.
Here being that the Trump administration has told U.S. chip designers to stop selling their software to Chinese groups. Now, that's according to the Financial Times, citing several people familiar with the matter. They say the Commerce Department sent letters to electronic design automation groups, that those include Cadence, Synopsys, and Siemens EDA, all of which had been down initially, now back up, it looks like, after hours. But they say it's not clear that all electronic design automation groups got this letter. But this is, of course, the latest step as the Trump Trump administration is looking at different ways, continuing the Biden administration's moves to try to slow the Chinese rollout of advanced AI systems. Now, I spoke with people inside the building here about this story, and a Commerce Department official on background told me this, saying the Commerce Department is reviewing exports of strategic significance to China, that in some cases, Commerce has suspended existing export licenses or imposed additional license requirements while the review is pending. So not a specific confirmation or a denial of this story here, but clearly there is some action going on, and we have seen so far in the last 30 minutes or so the impact on those stocks. Morgan?
All right, I'll take it. And of course, there is a trade negotiation going on at the same time.
Great timing to announce that, but there you go. That's what we got today. Real quick, here we go on C3 AI. Street wanted them to lose 20 cents. They lost 16 cents. That's a beat by 20%. Street thought they would do 170 million in revenue. They did 108. That's a beat by 1%. EPS is down 45% year over year. Revenue's up 26%. Stocks up about 12% based on this beat. And then here are the exact ELF numbers. They beat on the top and the bottom. I guess guidance was an issue, and that's why the stock is struggling. But 332 versus 326 on revenue, beat by 2%. Revenue's up 4% year over year. EPS is up 47% year over year. They beat by 8%, 78 cents versus 72 cents expected on ELF.
I think someone in the comments said they also acquired a company as well. So I was going to look into that.
Did they buy Haley Rhodes' company? I think that's the headline. It might. I think that might. Yeah, they might have. All right. So if they're buying a big company, that could also be a reason, especially if they're dishing out a lot of money for it. ELF right here down 13% currently right now. Salesforce still holding on to its 5% pump, and C3 AI up about 14%.
If I could talk really quickly on the chip ban, I have spoken pretty negatively about this over time. I think it's a big mistake. Amit, you've heard me say this a bunch of times, but the idea that China is not going to be able to get their hands on artificial intelligence or advanced models has already been proven false. Okay. They've proven that they've been able to do it. And now I think what you're going to get is a lot more government funding into securing the fact that Huawei stays a frontier chip designer. And if they get to a point where they can truly compete with Nvidia, then that will allow them to compete for international markets as well. And that would, I think, be a large mistake. I think that the world should be written on the Nvidia standard. And in order to do that, Nvidia needs to make a lot of money and pour back a lot back into research and development to make sure that they stay at the very top. Right. So in order to do that, I would not close $17 billion annual markets, which would be, 25 billion the next year and even more after that. So it's an absolutely huge market for Nvidia. I think Jensen put it at about 50 billion. And, think about what that means for taxes going back to the United States. Think about what that means for overall jobs or just general research and development to make sure that Nvidia and potentially even AMD stay the standards for, probably the most important sector going forward.
Yeah, I was going to say, Jose, do you agree with what Tanner said?
I don't know. I mean, first, let me just... This ban here is more just on the software side of things. There's not anything new added from what I was seeing on the actual hardware side. That's why you're seeing kind of like your cadence and your synopsis down right now. So it's more on the software side. Now, with Tanner's point on the pushing away of the Chinese market, I don't know. I see both points of view, right? This AI technology is massive. And obviously, AI is going to be used for things like weapons and stuff like that. So there's no doubt about it. So I can see why there's the try to prevent certain players to getting AI chips and stuff like that to protect the governance and the safety of certain countries. Now, is that the right move? I don't know. Now, most recently, I feel like the United States is actually throwing a bone at Nvidia when they eliminated the AI diffusion rule. There was a statement there. I forget what they call it, but like a suggestion. It's more not a suggestion, but it made it almost illegal for any other country to use any Huawei chips. One of the things there was any countries that want to make trade deals with us you're not going to want to buy any form of Huawei chips, being the 910B, the 910C, or the 9A. So I think by doing that, it kind of eliminates this way of other countries. China, yes, China will be most likely Huawei dependent. But by doing that, it prevents any other countries from kind of thinking of going with an Huawei chip. Now, we did hear reports that maybe Malaysia or some other, I forget, I don't know if it was Malaysia or where, but Malaysia might be already buying Huawei chips. So I do see Tanner's point, but I do think it's such an emerging market that I don't know what the right answer is at this space, that we have to kind of be a little bit open and see where it has to be flexible. One day might be a little bit too much on one side. One day it might switch to the other, but eventually there has to be a median. And at least I think right now, we're trying to find that right medium where we're protecting US-based companies, we're protecting US country, and we're also trying to eliminate some of the threats out there.
Yeah, I think right now, Huawei offers a chip that is still completely destroyed. Like I think the 910C is comparable to an H20 at best, so if you're comparing it to a Hopper or even Blackwell architecture, then it's not really comparable. But that doesn't mean that that's going to stay the case generations from now. So I just I don't think that there is any sort of AI winner here. This will go on for decades, and to think that weapons and all of these things won't be developed by China, I like what we consider frontier models today will be the worst that you could possibly get 3 years from now. So I don't know if this is a race that you could ever even win necessarily, or try to prevent them from having any sort of good artificial intelligence, but you might hurt your overall lead. That's the only thing that I'm concerned about.
Yeah, no, and Tanner, I do agree that right now you are giving that money to Huawei, money that they shouldn't have, and now you're creating that opportunity and that optionality for Huawei to develop its own AI chips and to develop something competitive in the future, where right now it's not. So I do agree, by doing something like this, you are indirectly also creating some form of competition. But it's just, I think this space is so innovative and so new that we just have to keep playing ball and seeing where it goes. But I do agree with your thoughts there, Tanner.
All right, folks, we got 1 minute left. I am closing the pump or dump poll on my channel. Out of about 8,500 votes, somehow, some way, 69% of you voted pump. I'm going to close it here.
Nice.
Maybe that's a good sign. We're going to see. Here we go. 30 seconds. I'm going to be looking at the stock. Tanner and Jose are going to be on the website refreshing. This is what we do this for. Your friends and family have no idea this is happening. Most people in the world don't know you're staring at three guys on a YouTube stream trying to figure out if the candle will go up or down. But this is why we invest. The majority of the world does not allocate capital, but we do. And we are trying to get that allocation of capital to start compounding. And to do that, companies need to perform on earnings. So here we go.
You get me hyped up, Amit. Let's freaking go.
No, but it's important, bro. Most people don't invest. And if you're lucky enough to even know what the concept of investing is, and then you take the risk with your hard-earned money inside of Jensen Huang's company, hopefully on a day like this, Jensen Huang can put up some numbers and we can see the stock do well. So, all right, here we go. It is 4:20. The numbers should be going across the board. Jose and Tanner will be looking at them. If you get them, put it in the chat. And we are going to be seeing what the stock does. Stock initially is flat to green. It's up about 0.5%. It is moving like crazy. Volume, by the way, 235 million shares.
The volume is insane.
Absolutely incredible. All right, that's a big red candle. Well, it's not a big red candle, but it's red. 0.32%. There you go. There's the minute chart. Now that's green. Now that's 1.4. That's up. 1.5, 1.7, 1.3. We got to get at least 3% for me to believe that green candle has a chance to stay green. Now it's red. Now it goes back down. But that red is not really lasting. Wow, flipped green again. That's 5
Dude, the volume's
switches.
crazy here.
5 switches within the past 30 seconds between green to red. It's not really giving a definitive trajectory. This is almost exactly what happened last time, by the way. Up and down, up and down. And now we are just waiting for the numbers. Let's see. On my side, I still don't have the numbers. Oh, I got them. I got it. Oh, boy. That's a big one.
Oh, boy.
That's a big one. That is, at least on the top and the bottom, folks, we have a 28% beat on EPS. If you use 75 cents as your adjusted calculation, 96 versus 75. Some people have 93, but still big beat. 44.06 versus 43.2. That's a 2% beat on revenue.
I freaking check my freaking prediction, man. That is as close. Like, that is close. I could never believe they were going to get 75 cents of EPS. It didn't make any sense that they were going to get below like 85.
So Tanner, was the consensus 75 cents? That was the what everyone expected?
Well, it was weird. It was 93 before, and then some problems with the China stuff. Then in the last month, it really got lowered to 75. But yeah, in no way did I see it. I think my actual prediction was 90 to 91 cents.
Oh, so that
with
means
44 billion.
That means with the China stuff, getting it back down to 75, as you're saying for some of the analysts, that means they absolutely demolished earnings at that point to get to 96.
Well, I think we have to be careful because maybe the 75 was on a GAAP basis, which includes the hit from China, and this 92 is on a non-GAAP basis, which doesn't include the China hit. So I think that we have to see some of those numbers and what the expectations really meant. Because I'm pretty sure on a non-GAAP on a GAAP basis, maybe those numbers may be a little bit weaker.
I think it's GAAP. I think they're both GAAP. Well, okay, so someone else is saying they did 81 cents. Versus 75 cents, which is a little bit more believable, to be honest. You do have some conflicting reports here, folks. Yeah, a couple of you guys in the chat.
So 81, I think, is going to be now the non-GAAP basis, which is including kind of that one-time charge from China, where that 90 is probably the non-GAAP basis, which doesn't include it.
Okay, so still a beat.
I just want the report so I can see what their freaking data center revenue is at.
We touched 139.98, up 4%. I don't think anyone is super upset about that. It's not really giving up the green candle yet. This did happen last time, though, and then it went red. So I guess
Jose, what's the chances we got a 40 billion quarter for data center alone?
I'm expecting at least 39 on data center. That's the easy way. 40 billion definitely possible, especially if we saw some excitement, some pull on the head on the Blackwell as that ramps up.
I think 81 cents.
I can't get the number still though, which is wild.
Yahoo's doing 81 cents. Let me check a couple other sources, but I think it's more likely 81 cents on the GAAP basis. Here we go. Here's CNBC. Let's see what numbers they have.
Nvidia sees Q2 revenue at 45 billion plus or minus 2%. Now,
how much does that offset some of this disentangling we're seeing within the Chinese market?
93 cents adjusted.
It's Nevertheless.
Everybody's cheering here, but we are getting a beat on the top and bottom line. 96 cents adjusted. The street was anticipating 93 cents adjusted. That was wavering just over.
All right, so Jose's right. So 96 was adjusted. 81 looks like it's GAAP.
Got you.
It is a 3-cent beat. Revenue is $44.06 billion, slightly higher than what the street anticipated. To your point about the write-downs, as a result of these new requirements, Nvidia has incurred a $4.5 billion charge in the first quarter. Remember, they said that they were going to take a $5.5 billion, so possibly some more details coming as to when the rest of that will be hit. But and then data center revenue, because that's an important factor for their revenues, $39.1 billion, which was a little bit light of the street estimates on FactSet, guys. And I'll come back with a little bit more details on Q2 guidance.
Okay, we'll be.
Okay, 39.1 billion, Tanner, on data centers.
Sorry, say that one more time.
39.1 billion on data centers.
Got you.
Just under 40. Stocks, I mean, 3% is not crazy, but it's not fully dumping yet. So Street likes it initially.
That means their other segments did well, though. Gaming, automotive must have filled the gaps there.
Yeah, I'm looking. I mean, they still haven't posted the slides yet, but we're still looking for some stuff. Nvidia, okay, forward guidance. So hold on, we do have some more stats. So, okay, so first quarter data center revenue, 39.1 billion. I just said that. Adjusted gross margin, 61% versus 71%. So margins, that one did come down 10%. It expects revenue 45 billion next quarter. The street wanted 45.8. So they did miss by 800 million on that Q2 guidance number.
Yeah, and that's to me. Well, first on the gross margins, that 61 hit again. That's the one including. I'm gonna guess. I haven't gotten the numbers, but again, is gonna include the one-time charge. I'm
Correct.
gonna want to see more of that non-GAAP margins on it to see if it's closer to a 71%. Now the guidance.
Real quick, Jose.
Yeah.
But if they didn't lose the H20 chip, they would do 53 billion in Q2. So that H20 chip is really messing up their guidance.
Yeah. So I think that's to me was. Now the market is going to be 45 billion, I think, is what analysts were expecting. I think you mentioned around 45.3, 45.8, and we got that with guidance. So I'm not too sure. I'm not too sure about how the stock will react to this. I do think this is more like short-term pain on it. If that guidance of we're going to hear we need to listen to that commentary on the Chinese space. And if Jensen could tell us, hey, look, while we lost the Chinese market, we do have these opportunities, which we know we do. But when are they going to start hitting the top line number? When are they going to start hitting the bottom line number?
All right, we got the official results. I'm going to start reading them to everybody. Jose and Tanner, I know you guys will go through it. Let me get through all these numbers, and then in about a couple minutes, I'll get Jose and Tanner's take. So here we go. Nvidia first quarter for fiscal year 2026 revenue of 44.1 billion, up 12% from Q4, quarter over quarter, 69% year-over-year growth. Not bad. Data center revenue 39.1, up 10% Q over Q, up 73% from a year ago. Jensen Huang, our breakthrough Blackwell NVL72 AI supercomputer, a thinking machine designed for reasoning, is now in full-scale production across system makers and cloud service providers. Global demand for NVIDIA's AI infrastructure is incredibly strong. AI inference token generation has surged tenfold in just 1 year. As AI agents become mainstream, the demand for AI computing will accelerate. Countries around the world are recognizing AI as essential infrastructure, just like electricity and the internet, and NVIDIA stands at the center of this profound transformation. Revenue, again, is up 69% year over year. Gross margins are down 18%. Jose said that has to do more with some of the China stuff. So hopefully that recovers towards the latter half of the year and the street's not really going to get too upset about that. OpEx was up 44% year over year. Revenue's growing at 70%, OpEx at 44%. So a healthy distance between OpEx versus revenue growth. Operating income is up 28% year over year. Net income's up 26% year over year. 18.7 divided by 44.1. Their net income margin is 42%. Last quarter, that was 56%. So that is a bit of a decline. Obviously, those operating margins are hurting their net income margins, but maybe the street is going to overlook that for this quarter. And then again, EPS was 76 cents, which is what we're seeing right now. Outlook for the second quarter, 45 billion plus or minus 2%. This outlook reflects a loss in H20 revenue of approximately 8 billion. Otherwise, it would be about 53 billion. They're saying their margin should get back up to around 72% next quarter, which is good. And the street probably doesn't care about the 61% margin right now. OpEx about 5.7 to 4 billion. That's fine. And GAAP income about 450 million, or non-GAAP income 450 million, and tax rates about 16.5%. Which is fair. In terms of buybacks, I'll try to see. They bought back 14 billion of stock. 14 billion of stock. And they paid a dividend of about 244 million.
What is the, did you see cash flow from operations?
Let's see if we can find that. 18.7. No, sorry. Is that, no, 27.
Wow. Yeah, that's it. 27. That's insane.
Dude, that's up.
This is a cash making machine right now. It's insane.
That's up.
NVIDIA will be the most profitable company this year, I think.
I think with these numbers now, it actually makes more free cash flow than most of the Mac 7. I think there's only 1 or 2 Mac 7s that actually make now more free cash flow than Nvidia. I think that's wild.
Yeah, what was their CapEx? Like just over $1 billion, something like that?
Yep. Just over $1 billion.
Yeah, that makes sense. Yeah,
dude. I mean, cash flow at 27 billion, growing from 15 billion year over year. I mean, that's more growth than any of the Mac 7s. That's for sure. Stock is flat. Option sellers, so far, you win again.
Yeah. So they did kind of mention in one of the press releases that if they didn't have the H20 hit, their gross margins would have been 71.3% this quarter. So it would have been in line with what analysts were expecting. So a lot of this had to go with that kind of H20 ban. And I think that's why the market isn't too worried about that 60% gross margins hit. I'm not really liking in the short term, let me just reiterate, in the short term. Long term, extremely bullish on Nvidia. In the short term, kind of that guidance of 45 billion, which is what the analysts were kind of expecting after the H20 ban. I think there's going to be a lot of questions during the Q&A session about why should we still see massive growth opportunities now that the Chinese space is out of here, even though most of us here in this channel know why, but still, I think that's going to be an important topic that's just going to be banged on for the whole earnings call.
Yeah.
So hold on, that's a really good point. I think we should harp on that for a minute. If the only reason their guidance is sucking for Q2, 45 versus 53, is because they're losing China, does that mean they're not getting enough demand in other external parts of the world or from the hyperscalers to recoup that demand? Is that a fair critique, Jose?
I think it's a fair critique for the moment, but that's because the rest of the world is just waking up on those investments. And that's it. And that's why I think it's more of like a short-term negative thought process opposed to that long-term thought process, where that UAE announcement that we saw is multi-hundred billions of dollars. And it's not, you can't just start building a data center in a week or two. It takes time. So it's, when does that hit? Is it going to be a quarter from now, 2 quarters from now, 3 quarters from now? And UAE is just the top of it. You're going to see other countries wake up very similar. I'm going to guess Japan is going to be one of the next Stargate projects. I'm going to see a lot of UAE, of European Union countries also kind of be part of these massive awakens of AI infrastructure being built out. So at the moment, maybe yes, it's a great critique, but it's not going to hold up for much long.
Tanner, you think it's fair to critique them like that?
Yeah, I think I missed some of that, but
essentially the question is, hey, like, you lost 8 billion from China, but why aren't you getting 8 billion from somewhere else to make up for that?
Yeah, China's just an existing large customer, right? So the customers were already there, the orders, like that infrastructure is already set up, the supply chain was already set up. So it'll just be a few more quarters before, UAE was not going to start manufacturing major gains, the day after that they had signed a lot of those agreements. So it is just going to be a little bit of time there. But overall, I think that if you look at this company financially, I don't know, I necessarily wouldn't do that. I'd look at it as the full build out, zero slowdown from large companies. They are going to need the newest infrastructure, and as long as they keep their market share in terms of the customers that they do have, that's what I would be focused on, and just assume that the large companies make sure that their build outs are still happening. Nvidia will continue to rake in the big dollars.
Still holding 138, folks. I mean, it's not absolutely horrible or by any sense of the imagination. ELF right here, still down on the day. CRM was up 5%. CRM, now it's up about, how much is that up? About 3% CRM's holding on to. So they're doing okay. CRM, that's up 1% now. And then ELF right here, still down. ELF was down 12. Now that's only down 3. So that's not too bad. HP was down 15. They're still down 15. Synopsys up 1. S&P's flat after hours. Tessie's up 1%. AMD after hours is up 0.64. SMH semiconductor ETF is also up about 1%. Here's a little bit more coverage on some of these Nvidia numbers as well.
And loss from the H20 chip ban. The company is saying their outlook reflects a revenue of loss of approximately $8 billion due to the recent export control limitations. So $8 billion will be hit in the July quarter. That would be Q2 this upcoming summer. Just 2 weeks ago, Jensen Huang, the CEO, said that they would be getting about a $15 billion hit in losses. It seems like he's quantifying it for July quarter at $8 billion. Q2 revenue, again, the guidance is coming in at $45 billion. Back for you guys.
Christina, thanks. Pat, 53 billion would have been a different number for the outlook, huh?
Yeah, it would have. And we have to keep in mind, too, you write down something, it doesn't mean it's scrap, right? There's a lot of stuff that's work in progress. And like other companies we've seen, there's potential to be that worked off, but they do have to take the hit this quarter. And on the guide, right, I get a lot of questions on, well, will the Middle East make up for it? And there was a little bit of discussion of that before. China was 13% of NVIDIA. Now it's 5%. It's going to be tough in a short period of time for the Middle East to make it up on 8%, but it certainly is possible, just not probable.
Right. Not a lot of people comparatively.
Yeah, everyone kind of recognizing that this 53 billion versus 45 is just not that big of a deal if it is a 1 quarter thing, which I think is fair to say. Nvidia right here, 139, up 3.3% currently right now. So let's look at the different sectors of revenue they have as well. Tanner, any surprises here between data center, gaming, auto, etc.?
Yeah, gaming looks huge. That's a big surprise. It's like nearly $1 billion, but 900 million higher than what I had it at. So a little bit lower on the data center side for me, but made up for in gaming, which is, I mean, probably essentially worse, but it still is fine. I'm happy with the top line number overall. But yeah, sorry, I was just plugging some numbers. Total cost of goods sold looks huge. It's essentially up 210% year over year, or even 64% quarter over quarter. But yeah, I'm just looking through some of their numbers. Operating expenses look lower than expected. They were calling for 5.2 billion. That came in at 5 billion. Their amount of shares and buybacks was pretty aggressive. They purchased way more shares than I thought that they would.
But it should have been, right? The stock fell to 80.
Right.
So I mean, I'm happy they decided to buy back. Hopefully, when it was really red. Jose, give me your bear case for why we lose this 4% pump in the next 24 hours.
The mic during the earnings call, it's horrible.
It's true.
The only thing I would say is analysts and investors have I think I talked about it, have a lot of questions about the Chinese market, and I think Nvidia, it's just going to give us more of that long-term play thesis and kind of like the politician style based answer, which I think is the right thing. I mean, it's a company like Nvidia is not really worried about the quarter-to-quarter basis. I think they're worried more about the overall growth of AI, and that's still pretty much intact. So they could care less about that. But I think that overall top-level overview of the AI space is what could drive some of this dump down. But if we do get some color about the Chinese market, I think it could be a pump on that. And I want to say on the gaming space, the only thing I can think of why the gaming market is growing, I saw some questions coming in, is this quarter we did see a lot of releases of a lot of new laptops with the 5080, the 5070, and whatever type of mobile laptop chips they had. So those Dell and companies that were building the laptops most likely purchased the past quarter to build them. So that could be one of the reasons the gaming market is up a nice amount, just to that overall laptop phase.
What do you think about? Did you see the gross profit margin expected for next quarter? Essentially 72%. I thought that's pretty interesting.
Let's see. The only thing is, I know Nvidia kind of mentioned that these were going to be lower as they were going to ramp up like crazy, the Blackwell platform, and eventually we're going to get back to those mid levels. So hopefully this is the new ladder, right, Tanner? 72 this quarter two, then higher the next quarter, and then quarter four we go back to those high mid 70s.
Yeah, which they're still calling for, by the way, mid 70s by the end of the year.
All right, folks, she's trying to pump. She really is trying. She hit 140.47. Could not hold it, but the fact that it's even showing these signs of strength is encouraging. This didn't happen last time. By this time, last quarter, it was already flat or like down 1%. It wasn't like dropping like crazy or anything, but it was definitely not giving us almost a 4% move right here. Last time we saw 140 was back in January. And before that, we had 152 very briefly, and then it came back down. So maybe it can hold up at these levels. Yeah, we're going to see. We're going to have to see. There's a lot of volume coming in right now. You see a lot of people kind of selling into the strength. It's definitely more illiquid than during trading hours, but it's up about 3.65% currently right now. Okay, so we have the call in about 20 minutes. You have Nebius right here also getting a little bit of move. That's up 2.65%. And then CoreWeave, which was down 7% on the day, that is up 2.4%. So everything kind of going up with Nvidia right here. Google is up about 0.5%. Meta is up about 0.33%. Microsoft as well is up 0.5%. And then you got Apple that is also moving up 0.13%. So Nvidia kind of carrying the entirety of the market right now. Salesforce is red. Salesforce was up 5%. Salesforce is now down. Salesforce is now down.
NVIDIA actually holds roughly about a 7% stake in CoreWeave, which I think they recently just put out a 13F on. And people are like, oh, you know, it's great. They have like $900 million worth of that company. But the price that they actually put the 13F out was $37 a share for CoreWeave. Now it's at I think like 115 right now, something like this. So that's actually accelerated. I think it's almost a $3 billion position for Nvidia. Still peanuts for them, but it doesn't hurt if their venture side starts to scale as well, which you do see as these companies get larger. That, you know, Microsoft, Google, they can have big venture arms.
100%. Broadcom right here as well, up about 1.4% after hours. Okay, so we have about 20 minutes until the call. We did have something new break after hours that obviously I think is going to be important for the broader markets. I'm sure it'll be talked about tomorrow. But there's this new thing on Wall Street called the taco trade that some of you guys might not have heard of. And it stands for Trump always chickens out. So as you can see right here, this is the S&P 500 performance year to date when Trump pauses tariffs, when Trump lets go of the tariffs. And as you can see on these different elements, whenever he puts something out that one could refer to as chickening out on his original promise with tariffs, the market pushes back higher. Well, there's a reporter that was trying to mess up the stock market today, and she asked Mr. Trump about the taco trade, and here was his reaction. And obviously, you know, this will affect the entire market, and we'll see what it does to Nvidia tomorrow morning as well.
Mr. President, Wall Street analysts have coined a new term called the taco trade. They're saying Trump always chickens out on your tariff threats, and that's why markets are higher this week. What's your response to that?
I kick out?
Chicken out.
Oh, and then I chicken out. I've never heard that. You mean because I reduced China from 145% that I set down to 100 and then down to another number? And I said, you have to open up your whole country. And because I gave the European Union a 50% tax tariff, and they called up and they said, please, let's meet right now. Please, let's meet right now. And I said, okay, I'll give you till July 9. I actually asked them, I said, what's the date? Because they weren't willing to meet. And after I did what I did, they said, we'll meet anytime you want. And we have an end date of July 9th. You call that chickening out? Because we have $14 trillion now invested, committed to investing when Biden didn't have practically anything. This country was dying. You know, we have the hottest country anywhere in the world. I went to Saudi Arabia. The king told me, he said, you got the hottest we have the hottest country in the world right now. 6 months ago, this country was stone cold dead. We had a dead country. We had a country people didn't think it was going to survive. And you ask a nasty question like that. It's called negotiation. You set a number. And if you go down, you know, if I set a number at a ridiculous high number and I go down a little bit, you know, a little bit, they want me to hold that number, 145% tariff. Even I said, man, that really got up. You know how it got? The fentanyl and many other things, and you added it up. I said, where are we now? We're at 145%. I said, whoa, that's high. That's high. They were doing no business whatsoever, and they were having a lot of problems. We were very nice to China. I don't know if they're going to be nice to us, but we were very nice to China. And in many ways, I think we really helped China tremendously because, you know, they were having great difficulty because we were basically going cold turkey with China. We were doing no business because of the tariff, because it was so high. But I knew that. But don't ever say what you said. That's a nasty question. Go ahead.
Okay, so I think the term chickening out, if you look at what he does and then reverses it, if you want to call that chickening out, that is what he is doing. But like he said, I don't think anyone really thought that he was going to stick at 145%. So in that way, if you want to call that chickening out,
the institutions and hedge funds did, which is why they sold in April.
I know, but none of retail believed it. It was a beautiful trade to buy during those dips. It was free.
Yeah. I agree. Regardless, I think that reporter was trying to mess up the market because you never know what Trump could say right there. But I also agree with Tanner. I mean, like, is it technically chickening out? Sure, but it's also negotiating. And as long as we get better trade deals, that's what matters here. Given he mentioned the Saudis and the UAE, Jose, can you speak a little bit on the repeal of the diffusion rule and how much of a big deal it really is for Nvidia?
I think it's a big deal, right? So the UA diffusion rule, for those that aren't familiar, was it broke the world into 3 tiers. Tier 1, US-based allies. Tier 2, kind of like associates, but not really friends. And a lot of countries were there. And Tier 3, which are enemies like China and Russia. This was a complete Tier 3. Nothing has changed completely. So we still can't ship to those enemies of the states. But for Tier 2, you were limiting how many chips can be sent to these Tier 2 countries. You were already also asking for a lot of overstepping in some of the process of ordering these chips. And anytime in anything, whenever you have a hurdle to purchase anything, think about it yourself. If you need to go to a store, but you need to jump through so many fences before getting to that store, you're going to say, maybe I could wait. Maybe I'll buy some later on when I really, really need it. So now you're eliminating these hurdles. You're going to open up a lot of these other countries to buy as many chips as they can. And overall, I think that's very bullish for the AI infrastructure space, as sovereign AI, like we see, is expanding dramatically and other countries are waking up. We don't want to put the hurdles on those Tier 2 countries. Maybe we do on those Tier 3. That's a whole different question. But on the Tier 2 countries, we don't want to put that hurdle to grow the AI infrastructure being built on US technology.
Agreed. I think like the UAE deal was such a massive step forward, and I think that you're going to see that with a bunch of other countries. I don't think there will be a bunch of $400 million planes, but overall, there'll still be good investment.
Here's a little bit of an update. Jensen told CNBC a couple quotes. Let's listen to that, and then we got the call in about 13 minutes.
Are you doing a 140 bell, or what's going on here? I mean, I'm sitting here in the silence.
I don't know, dude. I mean, we got to wait till the call. This 140 is very fragile too. Like, I'm happy to see it, but I think the call is really going to determine how this plays out
over time. Let's get back to Christina Parks-Nevelis for more on NVIDIA. Christina?
Well, this is now coming from the CFO comments that are on NVIDIA's website. And so remember, we talked about the $4.5 billion write-down that NVIDIA had to take because of the H20 ban. The CFO comments are saying that write-down is lower than expected. Originally, they were expecting $5.5 billion. And the reason it's lower is that they were actually able to reuse certain materials. And this is a little bit of information because a lot of analysts thought that these H20 chips, because they're so low spec, they wouldn't be able to find another home anywhere else. It seems like maybe possibly at least $1 billion was able to find a new home. And
that's really good. That's new. So they were supposed to write off about $5 billion. They only wrote off $4 billion because they had $1 billion worth of H20s that they gave to somebody, which is not bad.
It probably wasn't the H20 itself. It's maybe like some of the memory components that they can, instead of using it in the H20, I don't know what memory the H20 uses, but some component like that instead of using it on the H20, they're like, hey, look, we can actually use this on the Hopper 100, on the Hopper 200, so we don't have to write it off. And I think we're actually going to see some of that inventory that they wrote off be able to do the same things in future quarters. It's just going to take a little bit longer. So I don't think it's going to be a complete write-off at the end of the day, even though they had to write it off right now due to the way accounting works.
Yeah, that's interesting.
And then for Q2, that revenue guidance that was given does reflect an $8 billion hit from the H20 ban. So possibly it could be just Q1 and Q2 taking the brunt of this, and then we move on. But I'm sure we'll get more details as to any long-term Q3 and Q4 impact from this H20 ban coming from the U.S. government. Guys?
Okay.
Dude, that's not bad. That's the day after the H20 ban, the biggest question on my mind was, hey, can't they get anyone else to buy these chips? And I know they're made specifically for China and stuff, but you would think that they could use them in some component, even if it's just like the memory storage, as Jose was saying. But this earnings would have been worse by about $1 billion if they didn't do that, right? So not bad that we're seeing that here. 140.2 on Nvidia. All right, let's do another poll right here in the chat. Here's the question. After the call in an hour, Nvidia above 140, Nvidia below 140. What do we think? What do you guys think?
Above 140 or below 140 after the call?
Yeah, after Jensen's done speaking, does the market say, all right, we're going to keep it at
Yeah,
140?
above 140.
Okay, Jose?
I'm gonna do the opposite because when I go bearish, it seems like stocks go a little green today. So I'm gonna go under 140 to help my long-term portfolio.
There you go.
Yeah, I think we'll be able to ring the bell after the call and we really see kind of how this stock reacts. But look, if it's up 4.2% right here, I mean, the last 3 quarters, it was flat during the call, and whatever the price action was before the call is what stayed or it went down. This is one of the first quarters in 5, if I'm not wrong, quarters where it's actually up almost 5% going into the print or going into the call.
Yeah, I think in an environment that NVIDIA is in right now, that the more transparency, the more understanding that Jensen can give about the environment that they're in, the better for the stock. So I don't think he can talk himself out of excitement. I only think that he could talk up the excitement. Maybe I'm wrong, but I still think that NVIDIA is undervalued versus where I think that they should be.
Do you think there's anything they could say on the call that is really bad that could reverse this 4%? Like, is there anything that you think?
If they start talking about something about China potentially never returning or something like this, I don't know. I think people still hold out for that. But after the news that we saw earlier, I don't know if that includes them selling a lower parameter chip for China or not. Jose, I think you said it had something to do only with software. But yeah, I didn't know much about that before we actually went into this call.
Bro, all of the semis are starting to pump. Holy crap. CoreWeave's up 7. Nebius is up 4. Nvidia's up almost 5. It's 5 cents away from 141. AMD's up 1.4. SMH, the ETF itself, is up 1.7%. Micron is up almost 2%. Broadcom is up 1.7. AMD again is at 1.4. TSM is up 1.5. If Intel's green, we're really pumping. Intel's green, even by...
That's wild. That is wild.
All right, do we ring the bell? Do I do it? Do we do it? I think we do
not
it.
If it's not above 140 right now.
No, it's 140.9. I think we ring the bell. But if it dumps after I ring the bell, I don't want to hear any complaints, all right? There we go. We ring the bell on this channel when we get to new price targets. NVIDIA, let's just hope the call goes well, but 140, not too bad. But 141, all right, we got to ring the bell.
Let's
141, 141 on NVIDIA. This shit better stay over 141 or you guys are going to show
That's
up.
got to be some bad luck, man. You missed the actual...
You guys are going to show up at my house with guns if it's not above 141. All right, we're holding 141. It's not too bad. Not too bad. Dude, the Bears have been so aggressive this year, not only on NVIDIA, but the entire market. And if Moody's downgrade couldn't take us down, the 20-year bond auction couldn't take us down, this tariff insanity we went through was the best buying opportunity ever for retail, couldn't take us down. I mean, do you guys have a general bearish view of this economy right now, or kind of NVIDIA numbers are decent enough to keep this train going?
No, I'm excited. I also think that even in a bad environment, that NVIDIA is such an outlier. Like, some people talk about like whenever the S&P is down, that the entire market is down, but that doesn't mean that individual names are always down. So NVIDIA is a bet on the most explosive new technology. And like Jensen Huang said, in extremely hard times like recession or trade wars, companies will actually further invest into the things that are actually working. And AI is working. So I'm less worried about the economy that NVIDIA is playing in, and more focused on the development of artificial intelligence and making sure that there's productivity gains from what they're doing. If that continues, then companies will continue to further their development and investment. Sorry.
Yeah, ditto to that. I don't want to. It's exactly the same thoughts. I mean, I think the AI market is completely revolutionary. That, well, it's not going to be immune, in my opinion. It's definitely going to be the strong survivor. And the AI space is, even if it's going to continue to innovate. So even if there is a loss of a year or something, innovation is going to continue for this industry.
Zach brings up a good point. 142 absolutely is that deep seek gap. So we got to 141. There's probably going to be heavy resistance there, but if we can get there, and after hours, it's not easy to fill those gaps. But if we could, definitely would be rather bullish for Nvidia. Broadcom up 2%. AMD. It's like 5 minutes before the call, all the semis decide they want to pump. We've had the numbers up for an hour, but 5 minutes before the call, the market starts to get excited right here. CoreWeave's up 5%. Nebius up 3.4. Nvidia, again, still above 141, now pushing almost 141.25. Taiwan Semi up 1.6. Intel up even more than what it was before. ELF recovering. It was down 15%. Now it's down 2%. And Microsoft, Meta, Google also all up about 0.5% right now.
Yeah, I've got a few questions for Jose whenever he gets back. But from my understanding, a lot of the business and workloads that we currently have might not even be GPU accelerated right now and are going in that direction. So NVIDIA is going to continue to find more and more use cases, especially in an agentic world. Imagine a time whenever the things that we used to think were small tasks or things that we just had to spend our time to just do manual entry of data or certain things like this, that all go away, but actually are really long response times for artificial intelligence. Things that OpenAI and Gemini and Anthropic can actually charge more for because it's saving you more time. But with that, also uses a crap ton of tokens. Yep. Tokens are the actual lifeblood of those models, right? And to generate tokens, you need GPUs. Or at least that's probably the most efficient way of generating those tokens. There's going to come a time real soon where companies are starting to measure their success of tokens generated per quarter, per month, per hour. And that'll be a large new KPI for big tech. That is showing no slowdown going forward. And until that happens, I don't see a world where NVIDIA ends up, slowing down production or not finding new partnerships that further their moat or continue in that direction. So, By
the way, Tanner, 140, 160. I mean, market likes it going into this call right now.
Hey, I'll keep talking if I have to. If we get to 42,
dude, it's probably because it's. I mean, what you're saying that Jensen's been saying this a lot about token. That the world is going to run on tokens,
but it really is though.
Yeah,
like it really is.
If he can highlight that even more in the call and explain why the biggest critique of NVIDIA is that it's cyclical, is that it's going to be done soon. It's like with robots and self-driving cars and LLMs that haven't even achieved AGI yet. If there is a cycle, it doesn't feel like it's 24 months. It feels like a minimum of 5 to 10 years, or at least 5 years.
Yeah.
And if that's the case, then maybe this thing can continue getting some momentum. Jose, any final thoughts before we get into the call in about 2 minutes?
No, I mean, tokens are going to be crazy. We just heard that Anthropic model that can do a task for about, I think it was 6 or 7 hours long. I think eventually you're going to have a lot of these AI agents running 24/7, and the amount of inference needed for that is going to explode dramatically.
Yeah, like we're talking about using AI to replace search, which is like probably one of the smaller use cases. The way that I think Jensen and a lot of the big tech leaders are thinking about it, like he said before, is you're going to have robotic layers that are overseeing a ton of other robots in these AI factories, and it'll be layers and layers of essentially what you would see in like an organizational pyramid, but all artificial intelligence. Obviously, there will be humans in the mix as well, but a lot of that work will be done by, GPU accelerated data centers. There's
pretty exciting, dude.
One large market leader there that make up for 75% of all the largest data centers. Nvidia, by the way, that's the name.
Well, market's liking it. As long as this call goes well, we're 10 cents away from 142. Call is not started yet. I will switch as soon as the call starts. It looks like it wants to get 142. And if we have a good call, maybe we wake up in that 145 range. I don't want to get too optimistic and say 150, but we would need to have something really dramatic happen to take away this 5%. And if we don't, then maybe we keep it. All right, let's see if the call is starting. Call is starting. All right, here we go. NVIDIA call.
Pray for the mic.
It is time to get started. Here we go.
Good afternoon. My name is Sarah, and I will be your conference operator today. At this time, I would like to welcome everyone to NVIDIA's first quarter fiscal 2026 financial results conference call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star 1 on your telephone keypad. If you would like to withdraw your question, please press star 1 again. Thank you. Toshiya Hari, conference.
Thank you. Good afternoon, everyone, and welcome to NVIDIA's conference call for the first quarter of fiscal 2026. With me today from NVIDIA are Jensen Huang, President and Chief Executive Officer, and Colette Kress, Executive Vice President and Chief Financial Officer. I'd like to remind you that our call is being webcast live on NVIDIA's Investor Relations website. The webcast will be available for replay until the conference call to discuss our financial results for the second quarter of fiscal 2026. The content of today's call is NVIDIA's property. It can't be reproduced or transcribed without our prior written consent. During this call, we may make forward-looking statements based on current expectations. These are subject to a number of significant risks and uncertainties, and our actual results may differ materially. For a discussion of factors that could affect our future financial results and business, please refer to the disclosure in today's earnings release, our most recent Forms 10-K and 10-Q, and the reports that we may file on Form 8-K with the Securities and Exchange Commission. All our statements are made as of today, May 28, 2025, based on information currently available to us. Except as required by law, we assume no obligation to update any such statements. During this call, we will discuss non-GAAP financial measures. You can find a reconciliation of these non-GAAP financial measures to GAAP financial measures in our CFO commentary, which is posted on our website. With that, let me turn the call over to Colette.
Thank you, Toshiya. We delivered another strong quarter with revenue of $44 billion, up 69% year over year, exceeding our outlook in what proved to be a challenging operating environment. Data center revenue of $39 billion grew 73% year on year. AI workloads have transitioned strongly to inference, and AI factory buildouts are driving significant revenue. Our customers' commitments are firm. On April 9th, the U.S. government issued new export controls on H20, our data center GPU designed specifically for the China market. We sold H20 with the approval of the previous administration. Although our H20 has been in the market for over a year and does not have a market outside of China, the new export controls on H20 did not provide a grace period to allow us to sell through our inventory. In Q1, we recognized $4.6 billion in H20 revenue, which occurred prior to April 9th, but also recognized a $4.5 billion charge as we wrote down inventory and purchase obligations tied to orders we had received prior to April 9th. We were unable to ship $2.5 billion in H20 revenue in the first quarter due to the new export controls. The $4.5 billion charge was less than what we initially anticipated as we were able to reuse certain materials. We are still evaluating our limited options to supply data center compute products compliant with the U.S. government's revised export control rules. Losing access to the China AI accelerator market, which we believe will grow to nearly $50 billion, would have a material adverse impact on our business going forward and benefit our foreign competitors in China and worldwide. Our Blackwell ramp, the fastest in our company's history, drove a 73% year-on-year increase in data center revenue. Blackwell contributed nearly 70% of data center compute revenue in the quarter, with a transition from Hopper nearly complete. The introduction of GB200 NVL was a fundamental architectural change to enable data center scale workloads and to achieve the lowest cost per inference token. While these systems are complex to build, we have seen a significant improvement in manufacturing yields, and rack shipments are moving to strong rates to end customers. GB200 NVL racks are now generally available for model builders, enterprises, and sovereign customers to develop and deploy AI. On average, major hyperscalers are each deploying nearly 1,000 NVL 72 racks, or 72,000 Blackwell GPUs per week, and are on track to further ramp output this quarter. Microsoft, for example, has already deployed tens of thousands of Blackwell GPUs and is expected to ramp to hundreds of thousands of GB200s with OpenAI as one of its key customers. Key learnings from the GB200 ramp will allow for a smooth transition to the next phase of our product roadmap, Blackwell Ultra. Sampling of GB300 systems began earlier this month at the major CSPs, and we expect production shipments to commerce later this quarter. GB300 will leverage the same architecture, same physical footprint, and the same electrical and mechanical specifications as GB200. The GB300 drop-in design will allow CSPs to seamlessly transition their systems and manufacturing used for GB200 while maintaining high yields. B300 GPUs with 50% more HBM will deliver another 50% increase in dense FP4 inference compute performance compared to the B200. We remain committed to our annual product cadence, with our roadmap extending through 2028, tightly aligned with the multiple year planning cycles of our customers. We are witnessing a sharp jump in inference demand. OpenAI, Microsoft, and Google are seeing a step function leap in token generation. Microsoft processed over 100 trillion tokens in Q1, a 5-fold increase on a year-over-year basis. This exponential growth in Azure OpenAI is representative of strong demand for Azure AI Foundry, as well as other AI services across Microsoft's platform. Inference serving startups are now serving models using B200, tripling their token generation rate and corresponding revenues for high-value reasoning models such as DeepSeek R1, as reported by Artificial Analysis. Nvidia Dynamo on Blackwell NVL72 turbocharges AI inference throughput by 30x for the new reasoning models sweeping the industry. Developer engagements increased, with adoption ranging from LLM providers such as Perplexity to financial services institutions such as Capital One, who reduced agentic chatbot latency by 5x with Dynamo. In the latest MLPerf inference results, we submitted our first results using GB200 and 2, delivery throughput compared to our 8 GPU H200 submission on the challenging Llama 3.1 benchmark. This feat was achieved through a combination of tripling the performance per GPU as well as 9x more GPUs, all connected on a single NVLink domain. And while Blackwell is still early in its life cycle, software optimizations have already improved its performance by 1.5x in the last month alone. We expect to continue improving the performance of Blackwell through its operational life, as we have done with Hopper and Ampere. For example, we increased the inference performance of Hopper by 4 times over 2 years. This is the benefit of NVIDIA's programmable CUDA architecture and rich ecosystem. The pace and scale of AI factory deployments are accelerating, with nearly 100 NVIDIA-powered AI factories in flight this quarter, a 2-fold increase year over year, with the average number of GPUs powering each factory, also doubling in the same period. And more AI factory projects are starting across industries and geographies. NVIDIA's full stack architecture is underpinning AI factory deployments as industry leaders like AT&T, BYD, Capital One, Foxconn, MediaTek, and Telenor are strategically vital sovereign clouds like those recently announced in Saudi Arabia, Taiwan, and the UAE. We have a line of sight to projects requiring tens of gigawatts of NVIDIA AI infrastructure in the not too distant future. The transition from generative to agentic AI capable of perceiving, reasoning, planning, and acting, will transform every industry, every company, and country. We envision AI agents as a new digital workforce capable of handling tasks ranging from customer service to complex decision-making processes. We introduced the Llama Nemotron family of open reasoning models designed to supercharge agentic AI platforms for enterprises. Built on the Llama architecture, these models are available as NIMs or NVIDIA inference microservices with multiple sizes to meet diverse deployment needs. Our post-training enhancements have yielded a 20% accuracy boost and a 5x increase in inference speed. Leading platform companies, including Accenture, Cadence, Deloitte, and Microsoft, are transforming work with our reasoning models. NVIDIA NeMo microservices are generally available across industries and are being leveraged by leading enterprises to build, optimize, and scale AI applications. With NeMo, Cisco increased model accuracy by 40% and improved response time by 10x in its code assistant. NASDAQ realized a 30% improvement in accuracy and response time in its AI platform's search capabilities. And Shell's custom LLM achieved a 30% increase in accuracy when trained with NVIDIA NeMo. NeMo's parallelism techniques accelerated model training time by 20% when compared to other frameworks. We also announced a partnership with Yum Brands, the world's largest restaurant company, to bring NVIDIA AI to 500 of its restaurants this year and expanding to 61,000 restaurants over time to streamline order taking, optimize operations, and enhance service across its restaurants. For AI-powered cybersecurity, leading companies like Checkpoint, CloudStrike, and Palo Alto Networks are using NVIDIA's AI security and software stack to build, optimize, and secure agentic workflows, with CloudStrike realizing 2x faster detection triage with 50% less compute cost. Moving to networking, sequential growth in networking resumed in Q1 with revenue up 64% quarter over quarter to $5 billion. Our customers continue to leverage our platform to efficiently scale up and scale out AI factory workloads. We created the world's fastest switch, NVLink. For scale up, our NVLink compute fabric in its 5th generation offers 14x the bandwidth of PCIe Gen 5. NVLink 72 carries 130 terabytes per second of bandwidth in a single rack, equivalent to the entirety of the world's peak internet traffic. NVLink is a new growth vector and is off to a great start, with Q1 shipments exceeding $1 billion. At Computex, we announced NVLink Fusion. Hyperscale customers can now build semi-custom CCUs and accelerators that connect directly to the NVIDIA platform with NVLink. We are now enabling key partners, including ASIC providers such as MediaTek, Marvell, Alchip Technologies, and Astera Labs, as well as CPU suppliers such as Fujitsu and Qualcomm, to leverage NVLink Fusion to connect our respective ecosystems. For scale out, our enhanced Ethernet offerings deliver the highest throughput, lowest latency networking for AI. Spectrum X posted strong sequential and year-on-year growth, and is now annualizing over $8 billion in revenue. Adoption is widespread across major CSPs and consumer internet companies, including CoreWeave, Microsoft Azure, Oracle Cloud, and xAI. This quarter, we added Google Cloud and Meta to the growing list of Spectrum X customers. We introduced Spectrum X and Quantum X silicon photonics switches featuring the world's most advanced co-packaged optics. These platforms will enable next-level AI factory scaling to millions of GPUs through the increasingly power efficiency by 3.5x and network resiliency by 10x, while accelerating customer time to market by 1.3x. Transitioning to a quick summary of our revenue by geography. China, as a percentage of our data center revenue, was slightly below our expectations and down sequentially due to H20 export licensing controls. For Q2, we expect a meaningful decrease in China data center revenue. As a reminder, while Singapore represented nearly 20% of our Q1 build revenue, as many of our large customers use Singapore for centralized invoicing, our products are almost always shipped elsewhere. Note that over 99% of H100, H200, and Blackwell data center compute revenue billed to Singapore was for orders from US-based customers. Moving to gaming and AI PCs. Gaming revenue was a record $3.8 billion, increasing 48% sequentially and 42% year on year. Strong adoption by gamers, creatives, and AI enthusiasts have made Blackwell our fastest ramp ever. Against a backdrop of robust demand, we greatly improved our supply and availability in Q1 and expect to continue these efforts in Q2. AI is transforming PC and creator and gamers. With a 100 million user installed base, GeForce represents the largest footprint for PC developers. This quarter, we added to our AI PC laptop offerings, including models capable of running Microsoft's Copilot+. This past quarter, we brought Blackwell architecture to mainstream gaming with its launch of GeForce RTX 5060 and 5060 Ti, starting at just $299. The RTX 5060 also debuted in laptops starting at $1,099. These systems that double the frame rate and slash latency. These GeForce RTX 5060 and 5060 Ti desktop GPUs and laptops are now available. In console gaming, the recently unveiled Nintendo Switch 2 leverages Nvidia's neural rendering and AI technologies, including next-generation custom RTX GPUs with DLSS technology, to deliver a giant leap in gaming performance to millions of players worldwide. Nintendo has shipped over 150 million Switch consoles to date, making it one of the most successful gaming systems in history. Moving to Pro Visualization. Revenue of $509 million was flat sequentially and up 19% year on year. Tariff-related uncertainty temporarily impacted Q1 systems, and demand for our AI workstations is strong, and we expect sequential revenue growth to resume in Q2. NVIDIA DGX Spark and Station revolutionize personal computing by putting the power of an AI supercomputer in a desktop form factor. DGX Spark delivers up to 1 petaflop of AI compute, while DGX Station offers an incredible 20 petaflops and is powered by the GB300 superchip. DGX Spark will be available in calendar Q3 and DGX Station later this year. We have deepened Omniverse's integration and adoption into some of the world's leading software platforms, including Databricks, SAP, and Schneider Electric. New Omniverse blueprints, such as Mega for at-scale robotic fleet management, are being leveraged in Kion Group, Pegatron, Accenture, and other leading companies to enhance industrial operations. At Computex, we showcased Omniverse's great traction with technology manufacturing leaders, including TSMC, Quanta, Foxconn, Pegatron. Using Omniverse, TSMC saves months in work by designing fabs virtually. Foxconn accelerates thermal simulations by 150x, and Pegatron reduced assembly line defects rates by 67%. Lastly, with our automotive group, revenue was $567 million, down 1% sequentially, but up 72% year on year. Year on year growth was driven by the ramp of self-driving across a number of customers and robust end demand for NEVs. We are partnering with GM to build the next gen vehicles, factories, and robots using NVIDIA AI, simulation, and accelerated computing. And we are now in production with our full stack solution for Mercedes-Benz, starting with the new CLA, hitting roads in the next few months. We announced Isaac GR00T N1, the world's first open, fully customizable foundation model for humanoid robots, enabling generalized reasoning and skill development. We also launched new open NVIDIA Cosmo World Foundation models. Leading companies include 1X, Agility Robotics, Figure AI, Uber, and Wabi. We've begun integrating Cosmos into their operations for synthetic data generation, while Agility Robotics, Boston Dynamics, and XPeng Robotics are harnessing Isaac simulation to advance their humanoid efforts. GE Healthcare is using the new NVIDIA Isaac platform for healthcare simulation, built on NVIDIA Omniverse and using NVIDIA Cosmos. The platform speeds development of robotic imaging and surgery systems. The era of robotics is here. Billions of robots, hundreds of millions of autonomous vehicles, and hundreds of thousands of robotic factories and warehouses will be developed. All right, moving to the rest of the P&L. GAAP gross margins and non-GAAP gross margins were 60.5% and 61% respectively. Excluding the $4.5 billion charge, Q1 non-GAAP gross margins would have been 71.3%, slightly above our outlook at the beginning of the quarter. Sequentially, GAAP operating expenses were up 7% and non-GAAP operating expenses were up 6%, reflecting higher compensation and employee growth. Our investments include expanding our infrastructure capabilities and AI solutions, and we plan to grow these investments throughout the fiscal year. In Q1, we returned a record $14.3 billion to shareholders in the form of share repurchases and cash dividends. Our capital return program continues to be a key element of our capital allocation strategy. Let me turn to the outlook for the second quarter. Total revenue is expected to be $45 billion, plus or minus 2%. We expect modest sequential growth across all of our platforms. In data center, we anticipate the continued ramp of Blackwell to be partially offset by a decline in China revenue. Note, our outlook reflects a loss in H20 revenue of approximately $8 billion for the second quarter. GAAP and non-GAAP gross margins are expected to be 71.8% and 72% respectively, plus or minus 50 basis points. We expect better Blackwell profitability to drive modest sequential improvement in gross margins. We are continuing to work towards achieving gross margins in the mid-70s range late this year. GAAP and non-GAAP operating expenses are expected to be approximately $5.7 billion and $4 billion, respectively, and we continue to expect full year fiscal year 26 operating expense growth to be in the mid-30% range. GAAP and non-GAAP other income and expenses are expected to be an income of approximately $450 million, excluding gains and losses from non-marketable and publicly held equity securities. GAAP and non-GAAP tax rates are expected to be 16.5%, plus or minus 1%, excluding any discrete items. Further financial details are included in the CFO commentary and other information available on our IR website, including a new financially information AI agent. Let me highlight upcoming events for the financial community. We will be at the B of A Global Technology Conference in San Francisco on June 4th, the Rosenblatt Virtual AI Summit and NASDAQ Investor Conference in London on June 10th, and GTC Paris at VivaTech on June 11th in Paris. We look forward to seeing you at these events. Our earnings call to discuss the results of our second quarter of fiscal 2026 is scheduled for August 27. Well, now let me turn it over to Jensen to make some remarks.
Thanks, Colette. We've had a busy and productive year. Let me share my perspective on some topics we're frequently asked. On export control, China is one of the world's largest AI markets and a springboard to global success. With half of the world's AI researchers based there, the platform that wins China is positioned to lead globally. Today, however, the $50 billion China market is effectively closed to US industry. The H20 export ban ended our Hopper data center business in China. We cannot reduce Hopper further to comply. As a result, we are taking a multi-billion-dollar write-off on inventory that cannot be sold or repurposed. We are exploring limited ways to compete, but Hopper is no longer an option. China's AI moves on with or without US chips. It has the compute to train and deploy advanced models. The question is not whether China will have AI. It already does. The question is whether one of the world's largest AI markets will run on American platforms. Shielding Chinese chip makers from US competition only strengthens them abroad and weakens America's position. Export restrictions have spurred China's innovation and scale. The AI race is not just about chips. It's about which stack the world runs on. As that stack grows to include 6G and quantum, US global infrastructure leadership is at stake. The US has based its policy on the assumption that China cannot make AI chips. That assumption was always questionable, and now it's clearly wrong. China has enormous manufacturing capability. In the end, the platform that wins the AI developers wins AI. Export controls should strengthen US platforms, not drive half of the world's AI talent to rivals. On DeepSeek and QN from China are among the best open source AI models. Released freely, they've gained traction across the US, Europe, and beyond. DeepSeek R1, like ChatGPT, introduced reasoning AI that produces better answers the longer it thinks. Reasoning AI enables step-by-step problem solving, planning, and tool use, turning models into intelligent agents. Reasoning is compute intensive, requires hundreds to thousands of times more tokens per task than previous one-shot inference. Reasoning models are driving a step function surge in inference demand. AI scaling laws remain firmly intact, not only for training, but now inference too requires massive scale compute. DeepSeek also underscores the strategic value of open source AI. When popular models are trained and optimized on US platforms, it drives usage, feedback, and continuous improvement, reinforcing American leadership across the stack. US platforms must remain the preferred platform for open source AI. That means supporting collaboration with top developers globally, including in China. America wins when models like DeepSeek and QN runs best on American infrastructure. Regarding onshore manufacturing, President Trump has outlined a bold vision to reshore advanced manufacturing, create jobs, and strengthen national security. Future plants will be highly computerized and robotics. We share this vision. TSMC is building 6 fabs and 2 advanced packaging plants in Arizona to make chips for Nvidia. Process qualification is underway, with volume production expected by year-end. SPIL and Amkor are also investing in Arizona, constructing packaging, assembly, and test facilities. In Houston, we're partnering with Foxconn to construct a 1 million square foot factory to build AI supercomputers. Wistron is building a similar plant in Fort Worth, Texas. To encourage and support these investments, we've made substantial long-term purchase commitments, a deep investment in America's AI manufacturing future. Our goal, from chip to supercomputer, built in America within a year. Each GB200 NVLink 72 racks contains 1.2 million components and weighs nearly 2 tons. No one has produced supercomputers on this scale. Our partners are doing an extraordinary job. On AI diffusion rule, President Trump rescinded the AI diffusion rule, calling it counterproductive, and proposed a new policy to promote U.S. AI tech with trusted partners. On his Middle East tour, he announced historic investments. I was honored to join him in announcing a 500 megawatt AI infrastructure project in Saudi Arabia and a 5 gigawatt AI campus in the UAE. President Trump wants U.S. tech to lead. The deals he announced are wins for America, creating jobs, advancing infrastructure, generating tax revenue, and reducing the U.S. trade deficit. The U.S. will always be NVIDIA's largest market and home to the largest installed base of our infrastructure. Every nation now sees AI as core to the next industrial revolution, a new industry that produces intelligence and essential infrastructure for every economy. Countries are racing to build national AI platforms to elevate their digital capabilities. At Computex, we announced Taiwan's first AI factory in partnership with Foxconn and the Taiwan government. Last week, I was in Sweden to launch its first national AI infrastructure. Japan, Korea, India, Canada, France, the UK, Germany, Italy, Spain, and more are now building national AI factories to empower startups, industries, and societies. Sovereign AI is a new growth engine for NVIDIA. Toshiya, back to you. Thank you.
Operator, we will now open the call for questions. Would you please poll for questions?
All right, Q&A.
Thank you. At this time, I would like to remind everyone, in order to ask a question, press star, then the number 1 on your telephone keypad. We'll pause for just a moment to compile the Q&A roster. Your first question comes from the line of Joe Moore with Morgan Stanley. Your line is open.
Great, thank you. You guys have talked about this scaling up of inference around reasoning models for at least a year now, and we've really seen that come to fruition as you talked about. We've heard it from your customers. Can you give us a sense for how much of that demand you're able to serve, and give us a sense for maybe how big the inference business is for you guys, and do we need full on NVL72 rack scale solutions for reasoning inference going forward?
Well, we would like to serve all of it. And I think we're on track to serve most of it. Grace Blackwell NVLink 72 is the ideal engine today, the ideal computer thinking machine, if you will, for reasoning AI. There's a couple of reasons for that. The first reason is that the token generation amount, the number of tokens reasoning goes through, is 100, 1,000 times more than a one-shot chatbot. It's essentially thinking to itself, breaking down a problem step by step. It might be planning multiple paths to an answer. It could be using tools, reading PDFs, reading web pages, watching videos, and then producing a result, an answer. The longer it thinks, the better the answer, the smarter the answer is. And so what we would like to do, and the reason why Grace Blackwell was designed to give such a giant step up in inference performance, is so that you could do all this and still get a response as quickly as possible. Compared to Hopper, Grace Blackwell is some 40 times higher speed and throughput compared. And so this is going to be a huge, huge benefit in driving down the cost while improving the quality of response with excellent quality of service at the same time. So that's the fundamental reason. That was the core driving reason for Grace Blackwell NVLink 72. Of course, in order to do that, we had to reinvent, literally redesign the entire way that these supercomputers are built. But now we're in full production. It's going to be exciting. It's going to be incredibly exciting.
The next question comes from Vivek Arya with Bank of America Securities. Your line is open.
Thanks for the question. Just a clarification for Colette first. So on the China impact, I think previously it was mentioned at about $15 billion. So you had the $8 billion in Q2. So is there still some left as a headwind for the remaining quarters? Just Colette, how to model that. And then question, Jensen, for you. Back at GTC, you had outlined a path towards almost $1 trillion of AI spending over the next few years. Where are we in that build out? And do you think it's going to be uniform, that you will see every spender, whether it's CSP, sovereigns, enterprises, or build out? Should we expect some periods of digestion in between? Just what are your customer discussions telling you about how to model growth for next year?
Yes, Vivek. Thanks so much for the question regarding H20. Yes, we recognized 4.6 H20 in Q1. We were unable to ship 2.5 billion, so the total for Q1 should have been 7 billion. When we look at our Q2 is going to be meaningfully down in terms of China data center revenue. And we had highlighted in terms of the amount of orders that we had planned for H20 in Q2, and that was 8 billion. Now, going forward, we did have other orders going forward that we will not be able to fulfill. That is what was incorporated, therefore, in the amount that we wrote down of the $4.5 billion. That write down was about inventory and purchase commitments, and our purchase commitments were about what we expected regarding the orders that we had received. Going forward, though, it's a bigger issue regarding the amount of the market that we will not be able to serve. We assess that TAM to be close to about 50 billion in the future, as we don't have a product to enable for the China.
Vivek, the probably the best way to think through it is that AI is several things. Of course, we know that AI is this incredible technology that's going to transform every industry. From, of course, the way we do software to healthcare and financial services to, retail to I guess every industry, transportation, manufacturing, and we're at the beginning of that. But maybe another way to think about that is where do we need intelligence? Where do we need digital intelligence? And it's in every country, it's in every industry. And we know because of that, we recognize that AI is also an infrastructure. It's a way of delivering a technology that requires factories. And these factories produce tokens. And they, as I mentioned, are important to every single industry in every single country. And so on that basis, we're really at the very beginning of it, because the adoption of this technology is really kind of in its early stages. Now, we've reached an extraordinary milestone with AIs that are reasoning, are thinking, what people call inference time scaling. Of course, it created a whole new, we've entered an era where inference is going to be a significant part of the compute workload. But anyhow, it's going to be a new infrastructure, and we're building it out in the clouds. The United States is really the early starter, and available in U.S. clouds, and this is our largest market, our largest installed base, and we're going to continue to see that happening. But beyond that, we're going to see AI go into enterprise, which is on-prem, because so much of the data is still on-prem. Access control is really important. It's really hard to move every company's data into the cloud, and so we're going to move AI into the enterprise. And you saw that we announced a couple of really exciting new products. Our RTX Pro enterprise AI server that runs everything enterprise and AI. Our DGX Spark and DGX Station, which is designed for developers who want to work on-prem. And so enterprise AI is just taking off. Telcos. Today, a lot of the telco infrastructure will be in the future software defined and built on AI. And so 6G is going to be built on AI. And that infrastructure needs to be built out. And it's at its very, very early stages. And then, of course, every factory today that makes things will have an AI factory that sits with it. And the AI factory is going to be creating AI and operating AI for the factory itself, but also to power the products and the things that are made by the factory. So it's very clear that every car company will have AI factories, and very soon there'll be robotics companies, robot companies, and those companies will be also building AIs to drive the robots. And so we're at the beginning of all of this build out.
The next question comes from CJ Muse with Cantor Fitzgerald. Your line is open.
Yeah, good afternoon. Thank you for taking the question. There have been many large GPU cluster investment announcements in the last month, and you alluded to, a few of them with Saudi Arabia, the UAE, and then also, we heard from Oracle and xAI, just to name a few. So my question, are there other that have yet to be announced of the same kind of scale and magnitude? And perhaps more importantly, how are these orders impacting your lead times for Blackwell and your current visibility sitting here today, almost halfway through 2025?
Well, we have more orders today than we did at the last time I spoke about orders at GTC. However, we're also increasing our supply chain and building out our supply chain. They're doing a fantastic job. We're building it here on shore in the United States, but we're going to keep our supply chain quite busy for many more years coming. And with respect to further announcements, I'm going to be on the road next week through Europe, and it's just about every country needs to build out AI infrastructure, and there are umpteen AI factories being planned. I think in the remarks, Colette mentioned there's some 100 AI factories being built. There's a whole bunch that haven't been announced. And I think the important concept here, which makes it easier to understand, is that like other technologies that impact literally every single industry, of course, electricity was one, and it became infrastructure. Of course, the information infrastructure, which we now know as the internet, affects every single industry, every country, every society. Intelligence is surely one of those things. I don't know any company, industry, country who thinks that intelligence is optional. It's essential infrastructure. And so we've now digitalized intelligence. And so I think we're clearly in the beginning of the build out of this infrastructure. And every country will have it. I'm certain of that. Every industry will use it. That I'm certain of. And what's unique about this infrastructure is that it needs factories. It's a little bit like the energy infrastructure, electricity. It needs factories. We need factories to produce this intelligence, and the intelligence is getting more sophisticated. We were talking about earlier that we had a huge breakthrough in the last couple of years with reasoning AI, and now there are agents that reason, and there's super agents that use a whole bunch of tools, and then there's clusters of super agents where agents are working with agents, solving problems. And so you could just imagine, compared to one-shot chatbots and the agents that are now using AI built on these large language models, how much more compute intensive they really need to be and are. And so I think we're in the beginning of the build out, and there should be many, many more announcements in the future.
Your next question comes from Ben Reitzes with Melius. Your line is open.
Yeah, hi. Thanks for the question. I wanted to ask, first to Colette, just a little clarification around the guidance and maybe putting it in a different way. The $8 billion for H20 just seems like, it's roughly $3 billion more than most people thought with regard to what you'd be foregoing in the second quarter. So that would mean that, with regard to your guidance, the rest of the business, in order to hit 45 is doing $2 to $3 billion or so better. So, I was wondering if that math made sense to you, and then, in terms of the guidance, that would imply the non-China business is doing, a bit better than the street expected. So, wondering, what the primary driver was there in your view, and then. This second part of my question, Jensen, I know you guide one quarter at a time, but with regard to the AI diffusion rule being lifted and this momentum with Sovereign, there's been times in your history where you guys have said on calls like this where you have more conviction in sequential growth throughout the year, et cetera. And given the unleashing of demand with AI diffusion being revoked and the supply chain increasing, does the environment give you more conviction in sequential growth as we go throughout the year? So first one for Colette, and then next one for Jensen. Thanks so much.
Thanks, Ben, for the question. When we look at our Q2 guidance and our commentary that we provided, that had the export controls not occurred, we would have had orders of about $8 billion for H20. That's correct. That was a possibility for what we would have had in our outlook for this quarter in Q2. So what we also have talked about here is the growth that we've seen in Blackwell across many of our customers, as well as the growth that we continue to have in terms of supply that we need for our customers. So putting those together, that's where we came through with the guidance that we provided. I'm going to turn the rest over to Jensen to see how he wants to.
Yeah, thanks.
Take this.
Thanks, Ben. I would say compared to the beginning of the year, compared to GTC timeframe, there are 4 positive surprises. The first positive surprise is the step function demand increase of reasoning AI. I think it is fairly clear now that AI is going through an exponential growth. and reasoning AI really busted through. Concerns about hallucination or its ability to really solve problems, and I think a lot of people are crossing that barrier and realizing how incredibly effective agentic AI is and reasoning AI is. So number one is inference reasoning, and the exponential growth there, demand growth. The second one, you mentioned AI diffusion. It's really terrific to see that the AI diffusion rule was rescinded. President Trump wants America to win, and he also realizes that we're not the only country in the race, and he wants United States to win, and recognizes that we have to get the American stack out to the world and have the world build on top of American stacks instead of alternatives. And so AI diffusion happened. The rescinding of it happened at almost precisely the time that countries around the world are awakening the importance of AI as an infrastructure, not just as a technology of great curiosity and great importance, but infrastructure for their industries and startups and society. Just as they had to build out infrastructure for electricity and internet, you got to build out an infrastructure for AI. I think that's an awakening, and that creates a lot of opportunity. The third is enterprise AI. Agents work, and these agents are really quite successful. Much more than generative AI, agentic AI is game changing. Agents can understand ambiguous and rather implicit instructions, and able to problem solve and use tools and have memory and so on. And so I think this is enterprise AI is ready to take off, and it's taken us a few years to build a computing system that is able to integrate, run enterprise AI stacks, run enterprise IT stacks, but add AI to it. And this is the RTX Pro Enterprise server that we announced at Computex just last week. And just about every major IT company has joined us, and I'm super excited about that. And so computing is one stack, one part of it, but remember, enterprise IT is really three pillars. It's compute, storage, and networking. And we've now put all three of them together finally, and we're going to market with that. And then lastly, industrial AI. Remember, one of the implications of the world reordering, if you will, is regions onshoring manufacturing and building plants everywhere. In addition to AI factories, of course, there are new electronics manufacturing, chip manufacturing, being built around the world. And all of these new plants and these new factories are creating exactly the right time when Omniverse and AI and all the work that we're doing with robotics is emerging. And so this fourth pillar is quite important. Every factory will have an AI factory associated with it, and in order to create these physical AI systems, you really have to train a vast amount of data. So back to more data, more training, more AIs to be created, more computers, and so these four drivers are really kicking into turbocharge.
Your next question comes from Timothy Arcuri with UBS. Your line is open.
Thanks a lot. Jensen, I wanted to ask about China. It sounds like the July guidance assumes there's no SKU replacement for the H20, but if the president wants the U.S. to win, it seems like you're going to have to be allowed to ship something into China. So I guess I had two points on that. First of all, have you been approved to ship a new modified version into China, and you're currently building it, but you just can't ship it in fiscal Q2? And then you were sort of run rating $7 to $8 billion a quarter into China. Can we get back to those sorts of quarterly run rates once you get something that you're, allowed to ship back into China? I think we're all trying to figure out how much to add back to our models and when. So, whatever you can say there would be great. Thanks.
The president has a plan. He has a vision, and I trust him. With respect to our export controls, it's a set of limits, and the new set of limits pretty much make it impossible for us to reduce Hopper any further, for any productive use, and so the new limits, it's kind of the end of the road for Hopper. We have limited options, and so the key is to understand the limits. The key is to understand the limits and see if we can come up with interesting products that could continue to serve the Chinese market. We don't have anything at the moment, but we're considering it. We're thinking about it. Obviously, the limits are quite stringent at the moment, and we have nothing to announce today. And when the time comes, we'll engage the administration and discuss that.
Your final question comes from the line of Aaron Rakers with Wells Fargo. Your line is open.
Hi, this is Jake on for Aaron. Thanks for taking the question and congrats on the great quarter. I was wondering if you could give some additional color around the strength you saw within the networking business, particularly around the adoption of your Ethernet solutions at CSPs, as well as any change you're seeing in network attach rates.
Yeah, thank you for that. We now have 3 networking platforms, maybe 4. The first one is the scale up platform to turn a computer into a much larger computer. Scaling up is incredibly hard to do. Scaling out is easier to do, but scaling up is hard to do. And that platform is called NVLink. And NVLink comes with it chips and switches and NVLink spines, and it's really complicated. But anyways, that's our new platform, scale up platform. In addition to InfiniBand, we also have Spectrum-X. We've been fairly consistent that Ethernet was designed for a lot of traffic that are independent. But in the case of AI, you have a lot of computers working together. And the traffic of AI is insanely bursty. Latency matters a lot because the AI is thinking and it wants to get work done as quickly as possible. And you got a whole bunch of nodes working together. And so we enhanced Ethernet, added capabilities like extremely low latency, congestion control, adaptive routing, the type of technologies that were available only in InfiniBand to Ethernet. And as a result, we improved the utilization of Ethernet in these clusters. These clusters are gigantic, from as low as 50% to as high as 85%, 90%. And so the difference is if you had a cluster that's $10 billion and you improved its effectiveness by 40%, that's worth $4 billion. It's incredible. And so Spectrum-X has been really, quite frankly, a home run. And this last quarter, as we said in the prepared remarks, we added 2 very significant CSPs to the Spectrum-X adoption. And then the last one is Bluefield, which is our control plane. And so in those 4, the control plane of the network, which is used for storage, is used for security, and for many of these clusters that want to achieve isolation among its users, multi-tenant clusters, and still be able to use and have extremely high performance bare metal performance. Bluefield is ideal for that and is used in a lot of these cases. And so we have these four networking platforms. They're all growing, and we're doing really well. I'm very proud of the team.
Jensen, over to you.
That is all the time we have for
Okay.
questions. Jensen, I will turn the call back to you.
Thank you. This is the start of a powerful new wave of growth. Grace Blackwell is in full production. We're off to the races. We now have multiple significant growth engines. Inference, once the lighter workload, is surging with revenue generating AI services. AI is growing faster and will be larger than any platform shifts before, including the internet, mobile, and cloud. Blackwell is built to power the full AI lifecycle, from training frontier models to running complex inference and reasoning agents at scale. Training demands continues to rise with breakthroughs in post-training and like reinforcement learning and synthetic data generation. But inference is exploding. Reasoning AI agents require orders of magnitude more compute. The foundations of our next growth platforms are in place and ready to scale. Sovereign AI, nations are investing in AI infrastructure like they once did for electricity and internet. Enterprise AI must be deployable on-prem and integrated with existing IT. Our RTX Pro, DGX Spark, and DGX Station enterprise AI systems are ready to modernize the $500 billion IT infrastructure on-prem or in the cloud. Every major IT provider is partnering with us. Industrial AI, from training to digital twin simulation to deployment, NVIDIA Omniverse and Isaac GR00T are powering next-generation factories and humanoid robotic systems worldwide. The age of AI is here. From AI infrastructures, inference at scale, sovereign AI, enterprise AI, and industrial AI. NVIDIA is ready. Join us at GTC Paris. I'll keynote at VivaTech on June 11, talking about quantum GPU computing, robotic factories and robots, and celebrate our partnerships building AI factories across the region. The NVIDIA band will tour France, the UK, Germany, and Belgium. Thank you for joining us at the earnings call today. See you in Paris.
All right, folks, there we go. Q1 2025 for NVIDIA. We're going to spend the next 30 minutes breaking down what we heard from the call, getting some other perspectives. Friend of the channel, Steve, is with us as well. We heard from Tanner. We heard from Jose. Steve, just kind of your raw thoughts overall on these earnings.
I'm going to say something that's going to piss Tanner off.
Don't say it.
Do you not want me to say it?
No, you can go ahead and say it. I actually don't know what you're going to say, but if it's going to piss me off, I'm sure I don't want you to say it, but go ahead.
It's 100% going to piss you off.
Oh, I think I know what he's going to say.
And Amit, have I texted you?
I mean, today?
Just go
No,
on, bro.
I haven't told you what I'm going to say, right?
I think I know what you're going to say. Can I guess?
You can guess.
I think you're selling your SoFi for NVIDIA.
No.
Oh, okay. I thought that would piss Tanner off. Okay, go ahead.
No.
That wouldn't piss it. That...
Go ahead, say it.
I wasn't that impressed. Here's why. Here's why. Incredible quarter by all standards. There are things I'm seeing in the numbers that I'm not fond of. I do think it's a blip. I think it's going to be hard for this to get past 145 tomorrow. I wouldn't be surprised if it's 136, 137. But the next couple of quarters, I think this is going to do very well. I don't think that this holds. And the numbers that I'm seeing that I don't like is the quarter over quarter numbers, not the year over year. Look, we knew year over year was going to be great because it's expanded so much, but quarter over quarter on a guidance level, you're going down to 2.1% quarter over quarter growth next quarter. That's a far cry from the established range in this quarter and the previous quarter, Q4 2024, in their thinking, because when they report Q4 2025, they had 12.11% quarter over quarter growth and then 12.03. That just became a fraction, a very small fraction quarter over quarter. Now, even if Jensen is sandbagging and they do 47 billion, that's still 6.5% quarter over quarter growth. And you have margin compression. Net income was 42.6% this quarter. Last quarter is 56%. They haven't had a quarter under 50% net income margin since October 2023. So,
well, you know the reason for all of this.
I know the reason.
Right? It's China.
It's China. It's bigger expenses because they're building things out. It's multiple things. But after nitpicking, I do think Nvidia will be the biggest company in the world. I think it will continue to get bigger. And I think that we are just scratching the surface on how much compute we need. And I don't think people truly understand what is coming down the pipe. I will be buying more, but I think that we may see a little bit of a retracement before we see the next leg up. What was interesting is they absolutely believe in themselves because they murdered the dip. I mean, they increased their buybacks year over year by 48.5%.
Yeah.
I mean, they truly murdered that dip. They increased buybacks on a year over year basis by 4.6 billion. So they're putting their cash to use across the board. And I think sky's the limit. I just think it's going to be difficult the next couple of days. I don't think we're going to see what all of us want to see.
So what I heard was, what I'm going to say is going to piss Tanner off. NVIDIA is going to be the biggest and most important company in the world, and I'm buying more. Okay, I think we're fine.
Yeah, that hook that you had, it did not land because
because I didn't think this quarter was spectacular to get things moving past 150 or all-time highs anytime soon.
Yeah, but I don't think any of us expected that big a move. I mean, we're happy if we can even hold 140. Jose, let me get to you. Anything on the call that Jensen said that surprised you?
What surprised me? First, that Blackwell is now 70% of all of revenue, so it's Hopper is easily coming out, and Blackwell is becoming pretty strong. They added Google and Meta to Spectrum X. That's pretty good. I mean, we did see Arista stock kind of move negative to that. Another thing, I have a lot of things here, but the other one was the shipments of GB300 are expecting this quarter. Analysts were actually expecting that for quarter 3, but he actually said GB300 is expecting late quarter 2. So that's overall, in my opinion, bullish. Now, if I can, to Steve's point of the sequential growth here for Nvidia, obviously number one is China, but unfortunately for this industry, there is another cap that's really stopping Nvidia to grow at rapid levels, and it's just the manufacturing capabilities. You can only grow that capability so much every quarter. We've seen it from TSMC, we've seen it from all these other players that they're building capacity, and now you're playing at the loss of big numbers. So if you can only add about $4 billion in revenue each quarter due to the manufacturing capabilities, sequentially you're going to continue to see kind of that weakness in the quarter numbers. But I would say that's more of a manufacturing issue opposed to like Nvidia demand issues.
Tanner, your thoughts?
Yeah, I think the highlight of the call, obviously they showcased a lot of the things that were going well, but someone put it in the comments, but I think it was true. This was a call that was directly towards regulators and potentially even Trump himself. He's worried that the export bans are going to backfire on the US, and obviously it's a large part of their business, or was a large part of their business. So honestly, the way that I'm looking at this is a lot of the bearish points are already priced in. I don't see how it could get much worse than completely blocking NVIDIA's ability to sell. The potential catalysts or changes in regulation probably only go to benefit NVIDIA going forward. I don't know if you guys have different opinions on that. Can it get worse from here for regulations on NVIDIA chips?
Well, can it get worse? Yes. Is it going to get worse? Probably not.
Well, I mean, yes, it can get worse, but
probably
it doesn't look like that's the way they're moving.
No.
Yeah, I mean, you can see right here, Jensen said basically and Tanner's right. It was a message to Trump politically. I mean, the first 30 seconds of his statement was, "Hey, China's catching up. And if you guys want to let Huawei catch up, then be our guest. But if you kind of want Nvidia to be on top, an American company that cares about American values, you probably need to stop this export control stuff."
Well, we should want everything built on the American tech stack. That's the most important thing. I mean, I think we can all agree that if it's between the two, it benefits America and American companies if the number one stack is American products and software across the board.
Can I read a quote from Jensen?
Yeah, go for it.
The U.S. has based its policy on the assumption that China cannot make AI chips. That assumption was always questionable, and now it's clearly wrong. China has enormous manufacturing capabilities. In the end, the platform that wins, the AI developer wins AI. Export controls should strengthen U.S. platforms, not drive half of the world's AI talent to rivals. That's crazy. A strong statement.
It's well said, though.
It is well said.
It's very well said.
The thing that I found a little bit weird was it started off Jensen with that statement kind of going with battling the US government restrictions, but then later on there was a question about China and he kind of said that there was a plan behind it. So it's like, where do you fall? You're trying to say that we shouldn't do this, or is there a plan that you're following through? So that to me threw a little bit of a mixed signal, and it made that original entry point feel a little bit weaker. So if there was that, I don't know if it's anything we should read into, but
he's trying to kiss the ring without fully kissing it, but also making sure he smooches with it a little bit.
Yeah. He said, you know, you're wrong. This is dumb. Your Excellency. You know, like, I'm not trying to talk shit, but this is bad. And, you know, but obviously he's not going to talk trash about Trump.
Yeah, I mean, the fact that he said he has a plan, but then he also said, hey, if the plan includes not letting us to sell it to China, it's a crappy plan, is kind of talking from both perspectives there. So the analyst had a lot of questions about guidance and how to factor that in. I think the last question, Jensen really didn't give a response, and you could tell in the chat he was hesitating. People could realize he was stuttering over his words. He said we have nothing to announce in regards to China. Steve, I'll give it to you first. Is that a real concern that NVIDIA shareholders should be worried about when it comes to China revenues?
If you're a short-term shareholder and you wanted to see 150, 160, yes. If you're a long-term shareholder, no. That's not going to matter. I mean, look, you're in a position where China can catch up in certain aspects, and NVIDIA can't scale up or down, as Jensen said, at least 3 times on the call. But there's so much more demand, and we're scratching the surface. We are in the infancy. This is not a 2 or 3 year play. This is a 10 or 20 year play at this point. And the TAM, I think, is just going to keep getting bigger and bigger. So I don't think this is a reason for bulls to worry, especially with NVIDIA buying back the amount of shares they're buying. I mean, at this rate, they'll probably do 85 to 88 billion in net income this year, which is tremendous when you think about where they've been 2 years ago. And people should really focus on the fact that no company has ever expanded profitability at the rate that NVIDIA has, and they're still growing it. I mean, they've done something that's absolutely incredible.
Bro, did you see the free cash flow? I mean, this is
crazy.
No,
I didn't see the free cash flow, Tanner.
It is pretty incredible.
I know he's joking. He definitely did.
Yeah, and I mean, dude, they're growing 70% top line, bro. This is a company that is still, like, companies can barely grow 20%, 15%. They're doing 70%.
And this will not be a situation where they're not growing top line. No matter what they put out, there is demand to buy it. And every company that's a hyperscaler is in a prisoner's dilemma. Whatever NVIDIA puts out that is better than the previous generation, they have to buy, because if they don't buy it and their competitor does, they fall behind. NVIDIA is in a win-win situation.
Yeah. Yeah, absolutely. If I can make comments really quickly on the China comments that they're not working on anything.
Yeah.
I don't know if I believe that. I think we're seeing a lot of sources saying that they do want to make some powered down version of Blackwell, these sort of things. That could fall under what he said today, that, you know, Hopper is done. Maybe they're making some sort of B20 chip where they're making a powered down, maybe lower memory version of the Blackwell architecture. That could be interesting. And maybe for political reasons, they don't want to say that they're working on it until it's finished. I'm not sure, but we did hear timelines on that it's expected around June or July. From rumors, by the way.
Yeah, I think, I mean, I've seen the same rumors, Tanner. My best guess here, what's going to happen is right now, for example, if we look at the restrictions in China, you have pretty much two. You have kind of like the top level, which are like the H100s or the Blackwell equivalent now. Now there's like the weaker down version of like the B20, of the H20 and so on, that just kind of came in. I think if I was to make a bold guess here is if there are some plans or trade deals with China and the United States, that second tier is going to be used as a trading mechanism. That B20, that B40. I don't think we're going to ever see kind of like a trade deal happen with like the full-on AI chip, but I do believe there is that potential now that it's off the table. Kind of again, kind of going with the taco trade comment where we're using kind of like the H20 as the restriction right now. But if you come to the table with us on a form of trade deal, the B20 or the B40 can go back to your market. But I don't. So I think there is some truth to that Blackwell architecture, and Nvidia just doesn't want to share it with us right now. So I like that point, Tanner.
You're also right. It would definitely be called the B40.
Tanner, do you have a prediction on their 2026, since this is the fiscal year 26, free cash flow for Nvidia?
Full year?
Yeah.
No, I haven't really thought about it too much. I'm sure it gets pretty close to 100 billion, though. Like,
I think it's going to exceed. I think it's going to be 108.
Yeah, that'll be pretty incredible.
It's going to be one of the few companies that ever in the history of the market exceeds 100 billion of free cash flow, and at this rate, they're going to continue to exceed it year over year. And let's keep in mind what Apple's done. Apple hasn't grown revenue, but they buy back so many shares that EPS jumps. What do you think happens over the next 3 years with Nvidia with the amount of buybacks they're going to do?
I don't know. I hope that they keep a very growth-focused mindset. Maybe
Yeah,
they acquire.
I hope they don't become Apple.
No, that's not what I'm saying. They can do both. They're in a hyper growth mode.
I hope they don't get obsessed with buybacks like Apple has, because that's the reason why Apple's not doing well anymore.
I prefer growth focused. I do like the business models of the core weaves at the end of the day. I honestly wish maybe a mistake of Nvidia's, and I never knew if it was a regulatory concern, was just not acquiring all of CoreWeave at the time. The actual recurring revenue style model for that takes away a lot of the cyclicality or volatility of Nvidia's earnings. So I wish that they acquired the entire business. Clearly they love that style, and CoreWeave essentially acquires only one style of chip, which is Nvidia. So potentially what I hope that they do is really heavily build out their venture arm and just fund the AI of the future, because obviously they know, like, they're firsthand, they understand that this is the next revolution, and that you've seen it with like Microsoft deals and Shopify deals of the past. They can even give their chips out with some level of not only cash payments, but also potentially equity or some sort of favorable equity deals, and start getting stakes in other businesses.
Yeah, Tanner, I think the main reason for not the full acquisition or something like that is just your other cloud server providers are going to see that more of a complete threat. And so, like, okay, even though these cloud server providers are building their own AI chips and can be seen that, but it's like, now we're going to believe, since you own CoreWeave completely, you're going to always give them the first chips first, and we're going to be put in the bottom line. So I think it was more of like a business protection where their big customers would not have liked it.
They still are going to give CoreWeave the first chips as well. I mean, that the stake that they have is still beneficial. But no, I do agree.
after these earnings, we'll start with you, Steve. Do you see like a meaningful bear case at all for Nvidia?
No.
Not even a small bear case?
Would you rather buy Nvidia? What's it trading at? 30 times this year's earnings now? 28 times this year's earnings? Would you rather buy Nvidia here or Costco at freaking 50? Come on.
This is a little off topic, but the comments around the Singapore revenue being, what was it, 99% US based companies, I thought was a real, like, hey guys, look, this is not, Chinese smuggled sales or something like this that maybe people thought were happening in Taiwan or Singapore.
But that's what they said. They said their Singapore sales are 99% US companies.
Yeah, US based businesses.
That puts an end to that rumor, right? Because Nvidia can't be lying on, like, they literally can't be lying on audited financials if they say that.
Yeah,
right.
Yeah, because I think Chamath recently came out and said, hey, you know what? Nvidia's earnings might be essentially a 50-50 split between US and China, where I think Nvidia's saying, actually, it's probably, 80% US right now. and hopefully there's more international build out, but it's still heavily US.
I think they called him to tell him to correct that shit the week after.
Yeah, I think so too. They did. They definitely did. And this is something, I mean, luckily for those in my channel, we've talked about it, that all these big players, your Dell, your Google, your Amazon, your Microsoft, all these players tend to have an entity or subsidy in Singapore where it's more of like it's like their tax place or the Delaware, or what used to be the Delaware of the United States there. So that's where they would kind of get a lot of the billing, but a lot of those chips would always be shipped into other parts of the world. The only thing, like Tanner mentioned, is now we really got that confirmation of how much number it came in from.
Yeah, 99%. I mean, there's not a room for margin at all there.
Yeah. All right. Well, there we go. Are there any kind of big thoughts outside of that? I think it was a great quarter. That's kind of our conclusion.
Great quarter. I just want to see where it goes, but I'm a buyer. I'm not buying tomorrow, but I wouldn't be surprised if we're in the mid 130s at some point this week, but I'm going to be buying more. Like, this is long term. Great company.
Yeah, I think there's massive upside if the China deals, or if the China regulations change at all.
Yeah, and look, we don't know where regulation's going to end. Right now, it's a tug of war.
I personally think that they should, if you guys want American companies to have selection first, open up the entire Hopper architecture to China and allow Blackwell to be US and international first.
That's my hopes for these regulations, is as you get a better chip, the previous generation is nowhere near. I mean, right, the Blackwell in inference is 30 times better for it. So it's like, it makes sense, but I mean, sometimes with regulators, it takes longer for it to make sense to them. If I do want to say one point that really got to me that I didn't talk about it is Jensen is having its GTC Europe next week, and he does mention that there's a whole bunch of AI factories that have not yet been announced, and we might see some announcements maybe next week as he kind of does this Europe trade show. So there could be some nice sovereign AI bullish sentiments coming in the upcoming few days.
Yeah, look, the Saudi stuff was big. The China stuff is a headwind, but Trump, I mean, Jensen basically talked from both perspectives here. I think he knows that Trump's eventually going to use Nvidia as a pawn in the negotiations, but get him the ability to sell chips. And now you got Europe that he was talking up a lot of stuff they're doing in the region with new data centers and AI factories. So it doesn't look like the growth is slowing down. It looks like a quarter that got hit by the China stuff, but that should recover.
Tanner, you still think we get to 200 this year?
I mean, it's definitely possible if there's any cleanup in regulation with China. I think that's pretty clear.
200 will be 5 trillion market cap. But what exactly is that?
Yeah, I mean, yeah, very close to that. Like maybe a little bit more. I do think that the company overall, being the infrastructure of the fourth revolution, like this will be a $10 trillion there one day. I still stand on that. And I'm going to hold shares till we get there. But, they are a chip in a larger sort of political thing, which is not something that I could have foreseen. I mean, maybe I could have foreseen it, but I didn't.
Yeah.
But yeah.
All right, there we go. Nvidia, your friends and family probably had no idea that Jensen was speaking and moving hundreds of billions of dollars, but all of us were together.
Amit, we need to do this live at a bar for Nvidia one day.
No, we need to have a legit party one day at
Yes.
Nvidia and like really do it big. All right, everyone's Twitters and YouTubes are in the description, including Steve. Jose has a great newsletter every day called whatthechip.happened.com. Definitely make sure to subscribe to that. You can get all your semiconductor news from him every day on that newsletter. Jose's on YouTube. Tanner's on YouTube. We all make content about tech and video. All that stuff's in the description. And we'll have a lot more content over the coming days. Steve is on Seeking Alpha. I'll put his link in the chat. He'll probably have an article on Nvidia pretty soon.
Friday.
There you go.
I'll let everybody write their shit tonight. Like, people already have articles out on Seeking Alpha about Nvidia. It's like, there's no way you could have listened to the earnings call, digested all the information, read through the press release, done the numbers. It's just not possible. Like, there's articles out at 6 p.m. Like, not possible. It annoys the hell out of me.
Yeah, Steve is one of the better Seeking Alpha writers, and Jose and Tanner actually, have been in Nvidia for years. So should be some good coverage.
Yeah, this was a lot of fun, guys. Thank you so much.
All right, boys. That's it. Thank you, everybody. Appreciate your time and attention. I'll be back for the market open tomorrow. Jose and Tanner will have videos probably coming out tomorrow on Nvidia. Steve's article on Friday. And we will see you next time for Nvidia earnings.
Bye for now.
All right. Bye, everyone. Have a good one.